the economy that will kick in. And we do think there's a likely possible soft landing. Now, they're very unusual in history. We've only seen like two since the 1970s, but both of those have also coincided with an increase in CapEx spend that I just mentioned, and also innovation.
Nancy, always a pleasure. Appreciate it. Thanks for being with us on the program today. Nancy Curtin, the Chief Investment Officer at Alpha Tiedemann Global. And right now, let's get an update of the markets. S&P 500, 6 points lower. The NASDAQ 100 right now up 62 points. And Bailey, the Dow Jones Industrial Average, 107 points lower. That brings us to 10:32 on Wall Street. And let's get an update on world and national news. And we say good morning to Bloomberg's Michael Barr.
Thank you very much, John and Bailey. Former President Donald Trump is now in a Manhattan courtroom in New York. The former president will face a civil fraud case brought by New York Attorney General Letitia James. She spoke this morning before the trial.
My message is simple. No matter how powerful you are, no matter how much money you think you may have, no one is above the law.
Trump also spoke before the trial began, calling the case a politically motivated witch hunt by a racist attorney general. He will face the judge who ruled the former president inflated his net worth by more than $2 billion by overvaluing his real estate portfolio. California Governor Gavin Newsom has named Democratic strategist and Kamala Harris 2020 presidential campaign advisor LaFonza Butler to fill the U.S. Senate seat made vacant by Dianne Feinstein's death. Butler will be the only black woman serving in the Senate. She will also be the only LGBTQ senator who is serving for California. The Nobel Prize in Physiology or Medicine was awarded to two scientists who developed the technology that led to the mRNA COVID vaccines, Caitlin Carrico and Drew Weissman. Ricard Sandberg is with the Nobel Assembly.
mRNA vaccines, together with other COVID-19 vaccines, have been administered over 13 billion times. Together, they have saved millions of lives, prevented severe COVID-19, reduced the overall disease burden, and enabled societies to open up again.
Carrico and Weissman will split $1 million prize. A bizarre incident is under investigation during final negotiations over keeping the government running over the weekend. House Speaker Kevin McCarthy called a last-minute vote. Democrats were trying to delay this, and then all of a sudden, a fire alarm went off, evacuating a House office building. Democratic Congressman Jamal Bowman was caught on camera pulling that fire alarm. He says this was all an innocent mistake, even though it said fire right on it. Apparently, the Capitol Police are investigating the incident. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, they're both in the red. NASDAQ, the composite index, higher now by 64 points, holding on to a gain of 0.5%. S&P coming off of 4 weeks of losses, beginning the week with a 2-point drop, down by less than 0.1%. We've got the Dow down 104 points, lower now by 0.3%. 10-year yields 4.65% with the 2-year, 5.10%. 10-year Treasury yields approaching recent highs as investors wait for a speech by Fed Chair Jay Powell to provide clues about the direction of interest rates. And J.P. Morgan Chase CEO Jamie Dimon just wrapping up a wide-ranging interview here on Bloomberg Radio at the Techstars Leadership Forum in London. Among the topics, the possibility of higher interest rates.
When I talk to my board, I say, can it go to 7%? The answer is yes. Are there factors that would drive it, higher than, where it is today? 4.5, 4.6, or 4.7 over the 10-year bond now. Yes. Is supply and demand could push high? Yes. I'm just saying, be prepared for it.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Right now, the 10-year is at 4.66%. Again, the 2-year, 5.10%. Spot gold down 1% at $18.29 the ounce, while West Texas Intermediate crude very close to $89 a barrel, $89.14 right now, down 1.8%. Smile Direct Club shares are plunging after the maker of dental aligners filed for Chapter 11 bankruptcy protection. Smile Direct right now down by 59%. Recapping, stocks are mixed. Little change right now in the S&P, down 7 points, down by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. I'm John Tucker, along with Bailey Lipschultz. The two stars of the program are out today, so you got the scrubs, they call us?
It's kind of like in baseball when your team's eliminated and you let the field players pitch. That's kind of how I feel, coming in from second base.
Okay, all right. I'm looking at it more like we're the utility infielders, just, going forward. I did get data at the top of the last hour. The ISM manufacturing, prices paid, employment, new orders. Let's take a deeper dive into that, and I'm happy to say we're joined by Tim Fiore. He's the ISM Manufacturing Business Committee Chair, joining us to discuss the latest data. Remind everybody, it's 50 is the dividing line between growth and contraction in manufacturing. Manufacturing, the second biggest part of the U.S. economy, Tim?
Thanks, John. So, yes, when the numbers come in above 50, it generally means that we're expanding. When they come in below 50, it means that we're contracting. And the reason that 50 is used is that if in the survey, if everybody reported the same performance this month compared to the prior month, then we take half of those answers and we end up with 50. If everybody reported that everything was down, then we'd be 0. If everybody reported that things were up, then we'd be 100. So that's where the 50 comes from. But yes, the 50 is the kind of the magic number. And in the month of September, we came in at 49, which is really close. Now, the PMI generally moves in about a 25-point range. The sub-indexes sometimes move in larger ranges, but the PMI is generally running around 25 points. So we're 1 point away from a 50. This kind of says that September was very, very similar in performance to August, and we do seasonally adjust. So that's a real positive thing. So a month ago, last month, I think with your listeners, I reported that I thought that we were in the trough, that we are really in the trough, and we've been in the trough for a month or maybe even 2. And this kind of just confirms that with so close to 50, you can argue very easily that we performed the same level in September as we did in August, meaning we're kind of flat. It's still contracting very slightly, very marginally, and we could easily go in the next 2 or 3 months to something above 50.
And looking at different kind of data points that stand out, just wondering, looking at the new orders, rising to a more than 1-year high while still showing contraction, is that one of the data points that stands out to you, or how do you view some of the results in terms of new orders?
That was a very positive move because we've been looking for new orders now for quite some time. I think we have 13 months of contraction. This is month 13. Coming in at 49 and some change is, again, very close to 50. Feels really good. When I look at demand, I look at new orders. I look at new export orders. I look at customer inventories, and I look at backlog. The customer inventory number contracted again, which is a good thing for the future. It means our customers have less of our inventory than they really need. The new export orders is very weak. It's been weak, will remain weak for quite some time, but not super weak. I mean, we're coming in at 48, 49. Okay, fine. The one that was a bit of a surprise on the demand side was really the backlog contracting at a faster rate compared to August. But I think that's a timing issue. So as we go to an adjustment here, we had a decline. Then we've hit the trough, and then we're in the trough. We're trying to readjust to get ready for demand. Some of the indexes don't totally line up within the month. And I think backlog is going to be one of those. We had a 49 performance on new order level, which is less than the prior month, but not much less. We had more performance on the production side, which is really output and revenue, which exceeded expectations, 51.2. Again, not a huge difference. I would have really felt good if backlog had stayed at the same level or slowed down as contraction. I think that's coming. I don't think it obviously didn't happen in September. I think it's coming in probably November timeframe, which is all good. So demand is starting to show back up. We've been searching for it. We got the guards out there looking for it. It's finally kind of showed up a little bit. On the output side, production and employment, we had a great month. I mean, both employment and production expanded. Employment, a surprise. But I think that's another timing issue. I think because of the summer closing and people coming back in September, you probably see that employment number go back into a slight contraction. And then on the input side, supplier deliveries, inventory, and a couple of others, it was a bit of a surprise that suppliers actually struggled more in September delivering. But I think, again, it's a timing issue. I think we don't seasonally adjust supplier deliveries. So they probably had a lot more trouble delivering because of the incoming demands, and it's probably just a timing issue. I think October we'll see that grow. Positive thing, inventories, manufacturing inventories is recovering, which we've been waiting for. But overall, 49, that's a really good number for the month.
Is there a significant inflation component of this that policymakers can take anything away from?
Well, everybody kind of watches our prices number. Now, that's prices that we pay to our suppliers. It's not prices for labor. It's not prices we charge. It's prices that we pay to our suppliers. So surprisingly, we came in at low 40s. Again, we did a reversal in the month of August. The number was, I think, 46 or 47, 48.4, and we came in at 43.8. So, and that's really driven by the commodity markets. We've seen steel and aluminum, cement, copper decline, to kind of match the demand. And we're now down, still above the historical levels of both of those. But now that we've had oil prices above $100 or close to $100, 90 to 100 for the last month and a half, there were indications that there's price pressure showing up now in transportation, which is really surcharge driven, and that will then carry over into other commodities. So I think in the month of October and November, we're going to see that price contraction number ease a lot, and it wouldn't surprise me if that number gets back up to the 48 to 50 level. I think the 43 is a short-term thing, primarily because oil prices are up and they're staying up.
And Tim, looking at some of the industry breakdown, one thing that obviously has been top of mind is the UAW strikes. So when you look at how that's impacting things like manufacturing, how are those strikes impacting some of the results that you guys are seeing, and how do you see that expected to play out in the month of October?
So the month of September was too early to see it show up in the numbers, but we expected it to show up in the comments. So in the headline comments, 8% of our headline comments had concern about the UAW strike. So, but looking back at this, the fact that they didn't strike all plants, the fact that it's a dynamic strike where they haven't taken any off yet, but they're slowly adding some. They brought in the spare parts distribution centers, which is an immediate hit to people and the dealers. So I think this thing is kind of working its way out. Now remember, the big three no longer are the major automotive force in the United States. You've got Toyota, you got Tesla, you got the Kias, you got all those guys. So my guess is the U.S. automotive guys are probably somewhere around 60% of output, but I'm guessing.
Tim?
But I think if this thing goes on long enough, it's going to impact not only transportation equipment, but it's going to impact some of the other industry sectors that support it, like computers and electronics.
All right, Tim, thanks very much. We appreciate it. Tim Fiore, the ISM Manufacturing Business Committee chairing. Again, the ISM manufacturing number coming in better than economists had expected in the Bloomberg survey. Right now, 10:50 on Wall Street, and that's time for a look at company news. And for that, here's Bloomberg's Lisa Mateo. Hi, Lisa.
Hey, John. Microsoft CEO set to take the stand today at Google's antitrust trial. The Justice Department hoping Satya Nadella's testimony will help prove Alphabet's search division is maintaining a monopoly. Bloomberg's Isabel Lee has that story.
They want to use Nadella. They want to use Microsoft, a $2.3 trillion company, to prove their case. So last week, an executive already testified that it failed to secure a deal to put Bing search app in Apple's products. And Apple signed a deal with Google. So basically, this is really all just to prove that Google is now the monopoly. Microsoft, year to date, it's up around 30%.
Microsoft right now up almost 1%. And another big tech giant looking to expand in India. Bloomberg's Gina Cervetti has that story.
Google is set to start making its Chromebook laptops in India, the latest among the big tech companies to expand manufacturing capabilities in that country. CEO Sundar Pichai made the announcement on X, saying Google was partnering with HP to make the laptops in India.
And shares of Alphabet right now up about 2%. A billionaire investor could have his eyes set on Elon Musk's X Corp. Bill Ackman's Pershing Square received regulatory approval for a new investment vehicle that targets private companies looking to raise $1.5 billion or more and potentially take them public. Now, he tells the Wall Street Journal that X would, quote, absolutely be one of the options he's considering, but he doesn't know if Musk is interested or if the deal would be doable. Shares of Pershing Square right now down about 0.5%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets on Bloomberg Radio.
And I'm John Tucker along with Bailey Lushos. You are listening to Bloomberg Markets. Both Matt and Paul out today, so you're stuck with us. S&P 500 right now, 8 points lower. Right now, let's get a check of world and national news. And do that for us, here's Michael Barr.
John and Bailey, thank you very much. Former President Donald Trump has arrived at a New York court for trial in a lawsuit that could cost him control of Trump Tower and other prized properties. Trump vows to defend his reputation in a case he calls a sham. He spoke just before heading into the courtroom, slamming New York Attorney General Letitia James.
We have a racist attorney general who's a horror show who ran on the basis that she was going to get Trump before she even knew anything about me. She used this to run for governor. She failed in her attempt to run for governor. She had virtually no polling. She came back and she said, well, now I'll go back to get Trump again.
AG James also spoke before the trial, saying no one is above the law.
And it is my responsibility and my duty and my job to enforce it. The law is both powerful and fragile. And today in court, we will prove our case.
James sued Trump after a years-long investigation accusing the former president and his company of deceiving banks, insurers, and others by habitually lying about his wealth in financial statements. The judge already ruled Trump committed fraud in his business dealings. Another major strike looming, the largest healthcare strike in U.S. history, and it could happen this week. 75,000 Kaiser Permanente employees in 5 states are threatening to walk off the job this Wednesday. The union representing healthcare workers in California, Oregon, Washington, Colorado, Virginia, and Washington, D.C. said it remains far apart with the company on key issues. The workers are seeking pay raises, better pensions, and protections against outsourcing. The company says it will continue to negotiate in good faith. Authorities in northern Mexico say a roof of a church collapsed during Sunday Mass, killing at least 10 people and injuring about 60 others. Police said about 100 people were in the church at the time of the collapse, and they are still searching through the rubble. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Michael Barr, and this is Bloomberg. John Bailey.
All right, Michael, thanks a lot. I'm John Tucker, along with Bailey Lipschultz. Bailey, do you like your Pringles?
You bet. Can't help it. Love the little box.
There is a story on the Bloomberg today. The CEO of the Pringles maker says the company is studying Ozempic's threat, and they do believe it's a threat. This is the anti-diabetes drug, along with other appetite suppressants. It is a real threat to certain food makers, right?
Yeah, apparently the big thing with these drugs are that they slow the way that you digest food. So not only will people maybe not be eating fattier foods like Pringles, but you won't have the appetite for it. And the head of the company talking to Bloomberg News reporter Dina Shanker basically saying that they're worried and evaluating what could happen, but they aren't yet doing anything because no one knows what's going to happen.
Now, there was an earlier story, the airline, I think it was American or United Holdings, one analyst who covers the airline industry says that they could save millions of dollars perhaps with the advent of these drugs because passengers would be lighter, and one of the big costs for the airlines, of course, is fuel, and when you have heavy passengers, you use more fuel, and the savings add up to millions and millions of dollars.
Yeah, no, exactly. I always wondered, though, John, if I could, I'm a smaller person, weigh like 160 pounds, why can't I bring on a second or a third check bag if I weigh less than the average passenger on the plane?
Or why don't you just like apply for a discount from the airline site? Do you step on a scale at the ticket check?
I think you should hold your bag on a scale and everyone gets weighed and you pay per pound. But
are these drugs really going to take off? I mean, what's the consensus?
This is a humongous potential. These are drugs that when I talk to people in the pharmaceutical space that see hundreds of billions of dollars in earnings potential because they're kind of being a huge hit on social media and are something that you have to take for the long term.
Nothing's going to keep me away from my Pringles. I'm John Tucker, along with Bailey Lipschultz. I just had check of the markets. You are listening to Bloomberg Radio.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And good morning, I'm John Tucker along with Bailey Lipschultz. This is Bloomberg Markets with Paul Sweeney, Matt Miller. They're out today, but not to worry. Markets right now, they are mixed, and let's find out what's driving these markets this morning. Let's turn to Bloomberg's Charlie Pellet.
Thank you very much, John Tucker. Here's what's going on. The Dow, the S&P, they are both lower. NASDAQ is higher. Let us begin with the 10-year. The yield there, 4.67%, with the 2-year right now, 5.10%. The global bond sell-off resumed today. 10-year Treasury yields approaching recent highs as investors await a speech by Fed Chair Jay Powell to provide clues on the direction of interest rates. That speech scheduled for right now. S&P is down 5 points, a drop of 0.1%. The Dow Jones Industrial Average down 118, lower by 0.4. Again, NASDAQ up 0.5%. And as I mentioned, the 10-year 4.67%, with the 2-year right now 5.10%. J.P. Morgan Chase CEO Jamie Dimon, you heard him live here on Bloomberg Radio, speaking out on a wide range of issues, including the U.S. economy, the outlook for the 10-year, and artificial intelligence. Dimon was speaking at the Techstars Leadership Forum in London. Here's what he had to say about AI.
People have to take a deep breath, okay? Technology's always replace jobs. Your children will live to 100 and not have cancer because of technology. And literally, they'll probably be working 3.5 days a week. So technology's done unbelievable things for mankind. But, you know, planes crash, pharmaceuticals get misused. There are negatives. This one, the biggest negative in my view, is AI being used by bad people to do bad things.
And you can hear more of the conversation with Jamie Dimon on the Tape podcast. You can download it wherever you get your podcast. J.P. Morgan Chase shares right now, they are lower by 1%. Spot gold also down 1%, $18.29 the ounce. And West Texas Intermediate crude, $89.37 a barrel right now. WTI down by about 1.6%. So again, recapping, stocks are trading mixed. With the Dow and the S&P, they are both lower. NASDAQ higher by 0.6%. The S&P 500 index right now down by about 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. I'm John Tucker along with Bailey Lipschultz in for Matt and Paul. Let's take a deeper dive into these markets, some of the movers today. And with that, Alex Semenova joins us. I don't know how you feel about do-it-yourself dentistry. I was never a really big fan of that, Alex.
I've heard mixed things about it. One of my friends is doing it. She's having a pretty positive experience, but that is, of course, until...
I always thought the dental school route was the best way to do this.
Yeah, I mean...
Smile Direct.
Smile Direct Club is making it possible. Apparently, though, it's not turning out so well. They just filed for Chapter 11 bankruptcy protection. That's sending shares in a downward spiral today, down more than 60%. The company, which makes plastic dental aligners and is a competitor to Invisalign, offering these at a fraction of the price and directly to consumers versus having to go to the dentist. It plans to maintain normal operations while it works out a plan to repay its creditors. According to a statement, its founders will invest at least $20 million into the company as part of the reorganization. It listed $499 million of assets and more than $1 billion of liabilities in its bankruptcy petition. It went public in 2019, valuing the company at $8.9 billion and making its founders billionaires. But since then, it struggled with declining revenues, and it never turned a profit. It also ended up in a patent fight. So, John, I guess do-it-yourself dentistry is not kicking off so much.
Well, I was one of the people who had those metal brackets and wires. I actually had braces through the
Yeah, but you didn't do it yourself.
No, exactly. That's what I'm a fan. I like to think my teeth look terrific as opposed to, you know, sticking a plastic tray in my mouth. But Alex, another stock you keep an eye on, Sphere Entertainment, spinoff from MSG. What's going on with that company?
That's an interesting one to watch. Shares are up 4% today. That's after it opened its highly anticipated venue in Las Vegas on Friday with a rock show from the band U2. This is an enormous theater that has been long awaited by Vegas goers. It's kind of like an IMAX theater on steroids is how I've read it described, or kind of like a planetarium type of vibe, basically. Macquarie analyst Paul Golding apparently got to attend that concert. He said in a note today that after having experienced it this weekend, quote, "It's no hyperbole in calling it a revolutionary leap in live and experiential." The company said it expects final construction costs of the arena to total about $2.3 billion. It's also lined up other high-profile events. Formula One in November is the next one to look out for.
What else is going on?
Another name.
It's hard to top those two, actually.
Have you seen U2 in concert? I haven't.
Remember who you're talking to over here.
I remember when U2 dropped their album on all of our iPhones. That's kind of my last memory of U2.
All right, Alex, thanks a lot. Appreciate it. Alex Simonova.
Thank you, guys.
With the markets update, let's say hello to our next guest. We've got to get him seated first. And the higher ed chat. And we're also welcoming Bloomberg's Janet Lauren in on this discussion, our resident education expert here at Bloomberg. Reginald DeRoches is the president of Rice University. You know, I want to start out, it was over the weekend that the student loan payments began. I wanted to get your take on that first off, after the pandemic-induced delay that was initiated by the Biden administration.
Yeah, so for Rice, as I've mentioned a few times, we're a no-loan institution. We meet full need. And so at least from our perspective, we really work hard to make sure that we provide full financial need for our students. We're need blind as an admissions organization. And so from our student body, it's not as much of an issue. I know it's an issue for many students across the country, the issue of the loan repayment.
Janet Lauren joining us in studio, our education expert. I want to bring you into the discussion.
So we were talking a little bit earlier about graduate loans. Later this year, perhaps next year, you're going to see the student loan portfolio of new loans are going to be mostly for graduate students instead of undergrads. Can you talk a little bit about graduate education and programs and how those are funded, especially by loans, and how some of your students, how are they doing in terms of income?
Yeah, so we have a number of graduate programs at Rice, and particularly in the business and in the engineering side of things, data science, engineering, and then business. One of the things we focused on recently is making sure, in addition to the full-time programs where students do have to stop work and in some cases take out a loan, we have programs now that are part-time, that are online. We have in our fifth year of the Rice MBA at Rice online program, very popular. In large part to allow the flexibility for people to be able to continue to work while they do these programs online on their own time. And that's really helped with the affordability piece. And we have that both on the engineering and the management side and the business side. And in both cases, these students come out, doing very well financially.
And he was just telling us about a new program that was custom designed by for students to work at Chevron, where the employer pays. That's certainly the way to go if you can get someone else to pay for your master's degree. Can you tell us a little bit about that?
Absolutely. So this is a program that we designed in concert with Chevron, where they were very interested in taking their employees who didn't have a background in data science but needed to understand more about data science and AI. And we take around 25 people per year through that program. We've crafted it specifically for people in that industry, and we really provide them with the skill sets to be data scientists within the context of what they're doing at Chevron. And we're looking to do more of that with the various industries that are in the city of Houston.
I got to ask you about artificial intelligence. How is that impacting higher education? And I don't mean just like, looking at term papers and like, oh my God, where did this come from? Because you didn't write this, kid.
Right, so in many ways, there's the research piece and then there's the education piece. The research piece is it's impacting just nearly every field that's there. We happen to be across the street from the largest medical center in the world, the Texas Medical Center, with many institutions and medical schools there. And their number one interest in working with Rice is around AI and data science, because they know it's rapidly transforming those industries into healthcare. Similarly, the energy industry is being transformed through AI and data science, and so we're forming a lot more partnerships, and we're seeing how research in that space is really transforming nearly every industry. And so we're really focused on making sure we build our faculty with that expertise so that we can be a major player in some of the research that's taking place in the city of Houston and around the world. On the education side, clearly with ChatGPT and other tools like that, our approach has been to understand that it's here and make sure that we craft our assignments and our exams with the understanding that students have access to this. And now we're even asking our faculty to on their syllabus to ask the students whether or not they're using it for an assignment, just to understand whether or not they're going to use it, and make sure you keep that in mind as you're reviewing the assignment.
And given the shift that we've seen with a number of companies moving to Texas, how does that position or better position Rice graduates to be better set up for careers after college?
Very well. Both at the undergraduate level, we've always worked hard to prepare our students to be able to work in a variety of industries. We place our students very well. Our students are very well regarded. We have a robust, rigorous undergraduate education that's a good mix of both technical training as well as a broad-based liberal arts education. So we've done a great job at the undergraduate level preparing our students. What was mentioning earlier, what Janet was mentioning, is one of the things we're focused on now is how do we grow more graduate programs that help with the upskilling that's needed for all the industries in the city of Houston. And that's why we're growing more of these professional master's programs in engineering, in the business school and other areas where we know there's a major need in the city of Houston.
Are there enough student visas to go around? And I wonder if you could weigh in on that.
Yeah, we particularly at the graduate level, in particular at the doctoral level, many of our doctoral students are foreign students, and we've been challenged. I think many universities are challenged every year with the ability to get students in a timely fashion, getting their visas in a timely fashion to be able to come here and do their doctoral work. It's mostly really at the doctoral level. We have a large number of foreign students. About half of our PhD students are from outside the U.S., and that's something that's been a challenge for us, and I think many of my peer institutions.
Let me just reintroduce everyone here. Reginald DeRoches, the president of Rice University, discussing higher education, among other things. Janet Lauren from Bloomberg News, our education expert. I'm John Tucker, along with Bailey Lifschultz. Janet, you want to weigh in again?
Yeah, we were talking a little bit when we were meeting with reporters and editors about attracting faculty. You're growing not only your student body, but your faculty. Can you talk, is it a challenge to get people to want to move to Texas, especially if they're coming from the coasts?
So we are growing. We're adding 200 faculty for a university of our size. It's pretty significant. We have about 700 faculty currently at Rice, and we're growing the undergraduate student body by 20%. We find that if we can get people to Texas, we can get people to Houston, and they can see how cosmopolitan it is, how diverse it is, the rich culture, the museum culture and music culture, that we do well in recruiting people. And so we've been able to so far recruit an exceptionally talented group of faculty to Rice. We're really pleased with that, and we will continue to work hard. The main thing is to get them there, hopefully not during the summer when it's 104 degrees as it was most of the summer, but we get them here at a nice time of the year, and they really are surprised as to how diverse and cosmopolitan and what a great city it is.
The research that you do, does that then generate business that the university and the researchers can then capitalize on?
Absolutely, it does. And one of our big focuses moving forward as a university is helping to accelerate that. And so I created, when I became president, an Office of Innovation and Commercialization with the sole purpose of helping our faculty, in concert in some cases with industry, to commercialize their research and have new startups in the Houston area. And we have a new innovation district about 1.5 miles from campus. It's called the Ion District. The sole purpose is around 14 acres of land right between Rice and downtown, with the sole purpose of inviting industry to create more startups in the high-tech area in Houston.
Does any of that conflict, I wonder your thoughts on that, conflict with the idea behind research in the first place?
It doesn't conflict. In fact, it's synergistic, and increasingly now, it used to be people recruiting faculty to universities that are really interested in the lab space, more importantly in the graduate student quality, but now they also want to know what resources do you have to help them start a business or start a company from their research. It's becoming a part of what universities do on the research side, absolutely. And we want to make sure that we are equipped to help our faculty who have the interest in doing that. Not all disciplines do that. Not all faculty have that interest. But those that do, we want to put the infrastructure there for them to be able to do that.
And then do you often help them, with patents and then licenses with big companies?
We have an entire office that does that, and increasingly now we have some seed funding for them for the faculty who want to start a company, just to allow them to get off campus, have space somewhere else off campus, because you really can't do that on campus. And we have a new seed grant program that allow them to do that.
And then if there are innovations that are licensed, the university keeps some of that revenue. How does that work?
There's always a split, and sometimes we negotiate it. A portion goes to the university, a portion goes to the founder of the company and his or her partners.
And that's often coming from government research grants?
In some cases, it's coming from government grants. In some cases, it might be coming from private industry grants. And there are different contracts depending on where it's coming from.
So another potential revenue source for
it
universities?
It is. It takes some time to develop that, but absolutely it is.
Right, that comes to mind, Lyrica at Northwestern.
Yeah, Lyrica at Northwestern. There are a few of them, obviously, Google at Stanford and many others like that.
All right. How are the Owls doing?
They're doing well. We're 3-2. We had a big win earlier this year against our partner down the street, University of Houston. First time in 13 years that we beat them. And we're excited about being in the new conference, American Athletic Conference.
Will you explain to me how this is all working? Because it's a complete mystery, college sports at this point.
I
mean, if you're in California, on the lacrosse team, you now have to get on a plane to play
Duke
on the East Coast or whatever.
Yeah,
it's
even
insane.
worse, Syracuse, right?
I mean, that
That
really
may be the
impacts a student's ability to then study.
It does. No, it does. I think a lot of us are concerned about the conference realignment. My daughter was a student athlete at Rice. She was on the soccer team. She just graduated in May.
Congratulations.
Thank you. And I saw the hard work that she did traveling around the country to play games and coming back late at night and having to study for an exam the next day. So I think there's a lot of concern about the conference realignment. I'm a big proponent of intercollegiate athletics. I think it's an important part of a university. I think the student athletes at Rice are incredible people to be able to balance competing at the highest level with the academics, produces leaders, and we will continue to support them despite some of the challenges that we're facing right now in the industry.
That was a fascinating discussion. Good to see you. Nice to meet you. Thanks for stopping by the
Thank you.
studio.
Thank you.
Appreciate it. And Janet, you too. Reginald DeRoches, the president of Rice University, and Bloomberg News higher education reporter Janet Lauren. Quick look at the markets right now. We have the S&P 500 up 2 points at 42.89. The Nasdaq Composite Index up 104 points. And right now, the Dow Jones Industrial Average 99 points lower. That is down 0.3%. The driver's seat, as it has been for these markets for the past few weeks, it appears the rates market, 2-year yield right now, 6 basis points higher. 5.10%. The 10-year yield right now is up 9 basis points at 4.66. You are listening to Bloomberg Markets. Right now, let's get an update on company news. And with that, here's Bloomberg's Lisa Mateo.
Thank you, John. Birkenstock has set terms for an initial public offering that could raise as much as $1.6 billion. Now, according to an SEC filing, the German footwear maker is marketing shares at $44 to $49 apiece. The Norwegian sovereign fund, Durable Capital Partners, and billionaire Bernard Arnault have all expressed interest in that stock. Now, Birkenstock, just the latest major test of demand for new listings. Tech companies like Instacart, Arm, and Klaviyo have all gone public. JP Morgan Chase chairman and CEO Jamie Dimon says it's a sign that markets are open. He spoke earlier with Bloomberg.
You see IPO markets like an accordion. I think there were like 400 plus deals in 21 and 40 in 22, and I think something like 50 or 60 this year. Obviously, interest rates change a lot, how people evaluate, whether they want to go public, the value of cash flows, so earnings and cash counts a little bit more than it counted before. But for now, it's open. Markets are healthy. The economy is still okay. So it's open. Maybe not for everybody, but it's open.
Now, Dimon was speaking from JP Morgan's second edition of the Techstars Leadership Forum in London. That event comes just ahead of the UK's much-anticipated AI summit that takes place early next month. Well, weight loss drugs known for slimming down waistlines could be key in helping airlines trim down their own jet fuel costs. Analysis from Jefferies, who covers Novo Nordisk's Ozempic, says United Airlines would save $80 million a year if the average passenger weight falls by 10 pounds. United Airlines shares right now down about 0.5%, Novo Nordisk down 1%. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index back in the green right now. The Dow does remain lower. We've got the Dow Jones Industrial Average down 32 points, a drop there of about 0.1%, but the S&P higher by 10, up by 0.2%. The Nasdaq Composite Index up 134 points. That is a gain right now of 1%. 10-year yield at 4.66% on the 10-year. The 2-year right now, 5.10%. Spot gold down $15 the ounce to $18.33, drop there of 0.9%. And West Texas Intermediate crude down 1.8%, 89.13 right now for a barrel of WTI. Tesla said it shipped 435,059 cars globally in the third quarter as factory downtime led to its first delivery decline in more than a year. Tesla delivered 466,140 cars in the second quarter. Today's delivery results did miss expectations, but Tesla shares have turned around from earlier losses. Right now, Tesla is advancing by 1.4%. Recapping, stocks are mixed with the Dow Jones Industrial Average down 0.1%, the S&P up 0.2%, and Nasdaq higher now by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie Pellet. Thanks a lot. I'm John Tucker, along with Bailey Lipschultz. I was asking our resident rates expert earlier on the air if the Fed's preferred measure of inflation that we got, Friday, the PCE deflator, if that was lower, why are rates higher? And the response I got, I don't know.
It's pretty much half of the job of being a markets reporter is data comes out, stocks are up or down, just kind of plug in the reason. If it's easing Fed concerns, we're ripping, and if it's...
What are you saying? You're just pulling these excuses and explanations out of thin air? Anyway, let's bring in with that in the background, our next guest, Matt Stuckey, the Senior Portfolio Manager at Northwestern Mutual. With your market outlook and expectations, to what extent are rates in the driver's seat, and do you have an adequate explanation for us?
Yeah, those are all really important points, and we do think rates are ultimately going to be the driver of the outcome of this Fed tightening cycle, which from our perspective, is a form of recession, the timing of which we think is uncertain. I think that we've been surprised with the resiliency that we've seen from the economy throughout 2023, especially within the labor markets. But I think anytime we look at Fed tightening cycles since World War II, 10 out of 13 of those cycles have resulted in a recession. And the 3 that did not end up there and resulted in a soft landing, the Fed was not in inflation fighting mode, and they certainly are today. So we think the outlook is fairly kind of headed towards the recession camp. However, the timing of which is uncertain. So ultimately, the tightening of monetary policy conditions in the form of rates are likely going to be the driver of the end macro result.
Yeah, Matt, but it does feel like we've been talking about a potential recession for quite some time. With that call, I guess kind of what are we ignoring, or what's different this time than it had been for really the past year?
Well, I think the big difference is going to be just the passage of time, and let me kind of explain what that means. If we look back to 2020, what happened? We had such a big refinancing opportunity for individuals as well as companies in terms of kind of what the balance sheet looked like. Unfortunately, that you're deferring kind of those larger interest payments out into the future. But as companies have to come back and refinance those issues, it does start to dig into growth outlooks. And I think you're actually seeing a case study on this in the utility sector right now. Look at NextEra Energy as an example of kind of reducing forward growth as a result of the higher interest rate environment. It just essentially costs more to fund the projects that they need to grow. And that's just a case study for what's likely to unfold the longer that rates stay in this kind of higher rate environment.
Is it the defensive shares that we need to focus on now?
Well, ultimately, defensive parts of the market are going to have their time to shine in terms of the market cycle, but certainly defensive parts of the market that are rate sensitive, like utilities, are feeling the pain right now.
And I know you called out wages being something you're keeping an eye on and think that, is going to have kind of a higher impact on what lies ahead. What's the thinking behind that? Why are you focused on wages?
Well, ultimately, we think wages are kind of the last kind of standing component of the inflation equation that the Fed is fighting against. We have a hard time seeing, and I think the Fed likely would agree with this, that for a sustainable move lower to the Fed's 2% goal, wages have to be a part of that picture. And a wage environment of 4.5% year on year, even though it's falling and kind of getting down underneath the Fed's kind of 4% tolerance level, still is not going to cut it as it relates to kind of the services component of the inflation equation. John Williams talked about this in a Bloomberg interview a week or two ago and talked about a 3.2 to 3.5% wage rate as kind of being necessary for the Fed hitting their 2% goal. We're a ways from that today. And if you look through history, sustainable moves lower in wages typically only happen when recessions occur. So we think that ultimately what's likely to take place again this cycle.
Where is the team allocating assets at this point?
We've taken our time over the last couple of years leaning into, upward moves in rates. And, this leg up in rates over the last 3 months has been no exception. We've recently, for the first time in the last 7 years, we just moved to an overweight position in fixed income. But that's been, a 2 to 3 year process for our team. We do like the real interest rate environment that we're getting as fixed income investors. Real rates on the 10-year are above 2.3%. That's the highest that we've seen since 2007. We think that there's multiple ways for individual investors to have an advantaged position here, either through a recessionary outcome where the Fed responds with lower real interest rates, or if inflation does continue to move lower, those real rates are still attractive in any environment.
Hey, how tough has your job become? I mean, do you have customers saying, look, Matt, I can, stick money in a Marcus account and have absolutely no fees associated with that and still get a pretty decent return on my money, or even, short-term treasuries, bills.
Yeah, that's a common conversation we're having, and not so much in terms of, whether or not it makes sense to have a more diversified portfolio, but more within the conversation about how should we be allocating within fixed income. It's really comfortable to sit in the front end of the curve, not deal with any volatility as it relates to movements in rates or movements in credit spreads. But we do think that duration is a wonderful diversification tool in one's investment portfolio, particularly just because of the refinancing risk. Certainly it was comfortable to sit in the front end of the curve in 2006, 2007. However, when you went to kind of go back, if you were sitting in 2-year notes, as an example, and buy those again come 2009, it was a very, very painful conversation to say, yeah, those 5% rates are gone. You have to lock those in over longer periods of time to have that kind of great diversification asset within one's investment portfolio. So the conversation is more about diversification and kind of locking in, truly locking in higher for longer within your portfolio versus just avoiding volatility at all costs.
Matt, we had Jamie Dimon say, when asked if rates can go to 7%, the answer is yes. Is that something you agree with? And where are you going to be putting money to work if we see rates getting into the 7% range?
Well, anything's possible in financial markets. I think that's probably more of a tail risk scenario. But if we do see that happen, I think we would be aggressive buyers of just pure rate in that environment. We would avoid credit.
Welcome to the fourth quarter, by the way. The comparison's got to be a lot easier, but what's your expectation as we move forward on the earnings front?
The earnings side of the picture, I think, is a tough one to figure out right here. We've been in a decelerating earnings growth environment. We dipped into negative territory in 2023. But as you look into what's kind of baked in terms of consensus expectations for the fourth quarter and especially into the front half of 2024, there's a natural acceleration of earnings growth kind of coming back into the S&P 500, kind of capping off with the second quarter of 2024 calling for double-digit earnings growth. I kind of scratched my head at that number. That would be one of the kind of abnormal situations that I've ever seen, where the economy naturally reaccelerates in the face of significant monetary policy tightening. I guess it's possible, but for me, I think I'm skeptical. And to me, I think it's kind of more of the same of what we've been seeing lately, where companies are going to continue to try and push price down on consumers, and consumers are pushing back with kind of unit volume declines for a lot of companies. So yeah, I question how long that dynamic can persist. But certainly the consensus is calling for that as we push into 2024. But we're cautious with that consensus estimate, and so it's another reason why we prefer fixed income over traditional equities at the margin here.
Matt, a pleasure. Appreciate it. Matt Stuckey, Senior Portfolio Manager at Northwestern Mutual. I'm John Tucker, along with Bailey Lipschultz. It is 11:33 Wall Street time. Let's get an update, world and national news, and for that, we say hello to Michael Barr.
John and Bailey, thank you very much. President Trump is in a Manhattan courtroom as his civil fraud trial gets underway today with opening statements. Speaking in front of the courthouse, New York Attorney General Letitia James says no one is above the law.
Donald Trump and the other defendants have committed persistent and repeated fraud. Last week, we proved that in our motion for summary judgment. Today, we will prove our other claims.
Trump, his sons, and a number of Trump Organization executives face claims from AG James of engaging in a decade-long scheme in which persistent acts of fraud and misrepresentation were used to inflate Trump's net worth. Former President Trump says the case is a politically motivated witch hunt by a racist attorney general. He also spoke before the trial and had some choice words, calling Judge Arthur Engoron deranged.
This is a continuation of the single greatest witch hunt of all time. We have a rogue judge who rules that properties are worth a tiny fraction, 1/100, a tiny fraction of what they actually are.
Judge Engoron says he has already found clear, indisputable documented evidence that Trump inflated his net worth by as much as $2.2 billion. Negotiators for the Hollywood studios and the Actors Guild will sit down at the table for the first time in months. Entertainment Tonight co-host Kevin Frazier says fingers are crossed that they can hammer out an agreement to end the strike.
The hope is that now cooler heads will prevail, and that now that the writers' deal is done, the actors will sit down at the table, the studios and the actors will bang out a deal and get this thing over with so everyone can get back to work.
Meanwhile, late night shows are coming back on TV tonight. Global news 24 hours a day, powered by more than 2,700 journalists and analysts. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow lower, the S&P up barely. NASDAQ is advancing as well. Stocks are trading mixed. The rout in treasuries is intensifying as traders look to Fed Chair Jay Powell for clues about the direction of interest rates. 10-year benchmark bond hit 4.68% during a roundtable discussion with Powell that also included Philadelphia Fed President Patrick Harker. Right now, the 10-year, 4.68%. The 2-year, 5.11%. S&P up a point, little change there. The Dow down 61, down 0.2. NASDAQ up by 0.8%. The price of Brent crude oil right now is still hovering above $90 a barrel, and Daniel Yergin at S&P Global expects prices to fluctuate.
On the one hand, of course, you have a tight market, supply cuts, also inventories are low. On the other hand, it's still the overhang of the interest rates and what's going to happen to GDP growth. And that's where the tension is coming. And you can see the oil price bouncing between those two things.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. West Texas Intermediate crude, 89.34 a barrel, down 1.6%. Barrel of Brent, 91.08. Brent crude, the global benchmark, down by 1.2%. So again, recapping U.S. stocks, they are trading mixed. The Dow, the S&P, they are both lower. S&P little changed. NASDAQ higher by 100 points, up 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. I'm John Tucker, along with Bailey Lipschultz, in for Matt and Paul today. Bailey, let's go geopolitical at this point. Among other things, President Biden urging House Speaker McCarthy to follow up quickly with funding for Ukraine. This comes just hours after Congress passed that spending bill without funding for Ukraine. And we say hello to our next guest, Ed Price, a senior fellow at NYU and a principal at ERCO, joining us now. How is this being received?
Well, personally, I think it's insane. Remember when I was growing up, the Russians were going to kill us at the drop of a hat, and now we seem to have an opportunity to kill bad guys for pennies on the dollar, and we don't want to do it. I mean, does that strike you guys as normal? I mean, I thought the Republicans, at least, used to be into that sort of thing.
Yeah. And at this point, what is your outlook in terms of whether or not this is actually to get reintroduced and there will be funding for Ukraine?
I think it has to be. I think that if the Democrats, if the Biden administration were to come to any sort of deal with the House Republicans that did not include funding for Ukraine, they'd have to give up their entire democracies versus autocracies foreign policy theme. That's basically the Biden doctrine, I would argue. So they have to do it. But again, I'm a bit surprised and slightly dismayed, if I'm being honest with you.
You just recently wrote a paper, just to switch gears for a moment. Forget about the BRICS. What about the VIPs? First of all, we have to, with apologies to Jim O'Neill, explain what the BRICS are and how they've been replaced by the VIPs.
So Jim O'Neill, in his genius about 20 years ago, came up with this very famous acronym BRIC, which was Brazil, Russia, India, and China. Later, South Africa joined in to make the BRICS. And his argument was, well, if you look at long-term GDP trends in those countries, eventually they will take over the so-called West. That's kind of happening, which is great. In my bid for acronym fame the other day, I said, well, hold on a second. The BRICS are a thing. We know about the BRICS. What about the VIPs? Vietnam, India, the Philippines, Saudi Arabia. These are the countries Uncle Sam really needs to get on board if he wants to win the 21st century.
All right, let's start with Vietnam, because I will argue that Vietnam, once an enemy of the United States, is now one of our best friends in the region.
That's true. I mean, I would argue that Vietnam was never our enemy if we're thinking about South Vietnam, the country as was. And it was actually the communist North, right? Maybe that's nitpicking that was the enemy. But that actually makes your point even better, because now the communists in Hanoi are friends with Uncle Sam. So you might say, look, Vietnam's a slam dunk, but it is still nominally a communist country. They've seriously got beef with China, but that doesn't necessarily mean that they're at the level of like treaty ally.
And India somehow is both in the BRICS and also in the VIPs.
Yes, I knew you guys would point that out. That's very smart. Yes, India is in the BRICS. It's a quintessential member of the BRICS. But India also behaves however India wants to behave. This is the non-aligned tradition. And it's a member of the Quad as well as accepting Russian arms imports. So I think India is to play for, and India is important because it essentially has the deciding vote in World War III, how big it is and who wins.
What does the Philippines have for us?
Well, the Philippines is essentially a massive aircraft carrier. I mean, this is the Chinese want the Spratlys, they want the 9-dash line.
I will argue that does not come cheaply, because Mr. Marcos, as did his father, charges exorbitant fees to the United States for that.
Yes, I think that's probably true. And there was a time in American history where we might have annexed the Philippines outright and chose not to. So we've decided not to be a formal empire, and the cost of that is that you have to get on board with local politics, you have to pay people to get on board with your vision of the world, and you have to keep up soft power engagements, right?
And how does the U.S. get kind of on better terms with Saudi Arabia? Is that just through, golf partnerships or letting them buy sporting teams?
Well, that's part of it for sure. But I think that really and truly the Saudis need security. The reason the Saudis and Israelis are willing to sit around a table is their common distaste for Iran. And I think that if we provide the Saudis essentially with modern defense weapons, modern defense systems, they will be more inclined to help us out with oil supply problems should the Russians later down the line decide to restrict oil supply.
Can these countries, especially with Vietnam, effectively replace China as the place where the United States manufacturers go to get cheap labor and stuff produced?
Well, so this is a multi-trillion-dollar question, right? I think the assumption in the back of American business people's minds is that there is a place to replace China. There's some place in the world, a combination maybe of Vietnam, Mexico, and so on, for nearshoring, friendshoring, and so on. I think the problem is that the disruption entailed between the United States and China decoupling or even de-risking effectively shrinks the overall size of the global economy, right? It's hugely disruptive. So I don't think there's ever going to be a one-for-one replacement country such as India. I don't think that works.
Yeah. In terms of the other countries, what is the future of the relationships between the United States and these other countries, as you can tell?
Well, I'm hoping
And is it based on manufacturing or something else?
I think ultimately people are considering two possible futures. One is some sort of continuation of Pax Americana, albeit damaged, and another is some sort of Chinese hegemony. And whereas for the last maybe 20 years, people were slightly more comfortable with China rising as this commercial power, now I think some regional players, particularly Vietnam and the Philippines, scratching their heads and thinking, well, maybe we wouldn't quite like that as much as the international trading system that we have now led by Uncle Sam.
If you were going for a longer acronym, what kind of countries could have been playing for position in the VIPS basket that you built?
Right. Well, I mean, it only had space for 4, so I had to mold the analysis around the acronym. I think countries in the global south are going to be important. I think Mexico's already on board. Brazil is huge, but again, that's firmly in the BRICS. I mean, you can see what they're doing with the gold-backed currency project. I mean, ultimately, it would be nice to have Russia on board. And I think that one of the, to sort of echo Vladimir Putin's words, it wasn't the collapse of the Soviet Union that was the greatest tragedy of geopolitics in the 20th century. In my money, it was the fact that we didn't then give a Marshall Plan 2.0 to Russia and sufficiently get them on board with the Western system, maybe even NATO membership, maybe even EU membership. So ultimately, I think the play is to try and get Russia back into the system.
Ed, nice to see you again. Thanks for stopping by the studios. We appreciate it. Ed Price, Senior Fellow at NYU and a Principal at Ergo on the geopolitical risks and the latest research that he's doing. Right now, the markets, they are mixed. The major averages, we have the S&P 500, 7 points lower. That is down 0.2%. We're at 4280 on the index. The Dow Jones Industrial Average, 125 points lower. That's down 0.4%, 33,380 right now. And the NASDAQ 100 up 87 points. That's up 0.6%, despite the fact that yields are rising. Multi-year highs for the 10-year, 11 maybe 12 basis points higher at 468. The 2-year up 7 basis points. That's at 511. You're listening to Bloomberg Markets. And it's 11:50 on Wall Street. And it's time for company news. Let's bring in Bloomberg's Lisa Mateo.
Thank you, John. Norfolk Southern says its recent system outage was related to a vendor product defect and not a cyber attack. But Bank of America still downgraded it from buy to neutral over worries about data integrity. Bloomberg's Katie Greifeld has more.
They also knocked the price target down to $215 from $266. They wrote that the multiple external impacts to the operations is of, quote, increasing concern, and that combined with its data integrity and the suspension in customer moves, Norfolk could see potential share loss to its peers. I'm sure we're going to hear a lot more about that when Norfolk reports its earnings on October 25th.
Now, shares right now down almost 3.5%. Shares of Tesla, well, they're fluctuating after the EV maker reported third-quarter deliveries that missed estimates. Bloomberg's Abigail Doolittle has the details.
The deliveries came in just a little bit above 435,000. The expectation had been for deliveries to come in at 461,000. And this puts into question whether or not Elon Musk's whisper number of about 2 million deliveries on the year, are we going to fall short of that?
Now, at the same time, Tesla has also announced an updated version of the Model Y in China to better compete with rivals. It has a faster acceleration, new wheel design, and added ambient lighting. All that at the same price. Right now, shares of Tesla up about 0.8%. And Apple says bugs with the latest iOS 17 software and third-party apps are what's causing the iPhone 15 Pro and Pro Max to overheat. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets on Bloomberg Radio.
And I'm John Tucker, along with Bailey Lipschultz, in for Matt and Paul. You are listening to Bloomberg Markets, 11:55 on Wall Street. Let's get an update. World and national news. We say good morning to Michael Barr.
John, Bailey, thank you very much. Former President Donald Trump is at a Manhattan court in New York. Trump will face a civil fraud case brought by New York Attorney General Letitia James. She spoke this morning before the trial, saying justice will prevail.
My message is simple. No matter how powerful you are, no matter how much money you think you may have, no one is above the law.
Trump says the case is a politically motivated witch hunt by a racist attorney general.
Very simply put, it's a witch hunt. It's a disgrace. We have a corrupt attorney general in this state.
He will face the judge who ruled the former president inflated his net worth by more than $2 billion by overvaluing his real estate portfolio. All eyes are on the House floor this week as Representative Matt Gaetz continues his threats to House Speaker Kevin McCarthy following his work with Democrats over the weekend to avoid a government shutdown. There's word that move to boot McCarthy from his job could begin as early as today. New York Governor Kathy Hochul announced this morning nearly 400 employers throughout the state are ready to hire migrants from Venezuela as soon as they get work authorizations. Speaking in New York City, Hochul says migrants can start applying for temporary protected status through a state portal tomorrow.
18,000 jobs are already available, waiting for people who signed up in the portal. So that's incredible. That can help solve our problems, at least be a start toward reducing the number of people who need shelter in our city.
Last month, the Biden administration made hundreds of thousands of Venezuelans already in the country eligible for work permits. California Governor Gavin Newsom will appoint LaFonza Butler to fill the remainder of late Senator Dianne Feinstein's term, making her the only black woman in the current U.S. Senate and just the third in its history. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg. John, Bailey.
Michael, thank you very much. I'm John Tucker, along with Bailey Lipschultz. There's a story, Bloomberg Business Week, about financial advisors. And Bailey, I think it's safe to say they're in something of an existential crisis, given rates, where rates are, and where you can get returns.
Yeah, the Bloomberg News report saying with high interest rates, you can get 5% returns, from those CDs or savings accounts. JT, I know you're also a Marcus user, so it's easier to throw some cash and get a 4.4%.
No, it's stupidly enough, I'm not, and I'm not getting anything from my Wells Fargo account. And Carol,
how long have you been doing this, Tucker? I mean, you haven't
that's the problem.
Anything after 100
Carol
years
Masser,
on how to
who's
invest?
replacing me. Apparently, I've been fired, but
nobody can replace you.
I'm always here, so I don't have time to follow.
They're trying to give you a break because if they break you,
advice.
then we don't have a John Tucker.
I mean, it's enough of an existential crisis that they have their own future-proofing conference out in Los Angeles, and the article in Bloomberg Business Week takes a deep dive into that, where they actually have to have like bands and speakers and telling them that they matter. They still matter despite these higher rates.
They still matter, even though looking at the article, basically it's increasingly difficult to convince clients to have a financial advisor, and this all happens when we had the meme stock craze and people taking advice from YouTube to kind of beef up their portfolio. And looking at the story, basically saying there are more advisors planning to retire in the next 10 years than young advisors wanting to step into their place. So in a relationship-driven business, if there's not people who want advisors, it kind of makes sense.
Well, more importantly, I suppose the next generation doesn't see the value in financial advisors anymore.
Well, we've been living in this, where you just follow the index and you do just fine and then don't pay as many rates. I mean, not rates, but fees, Apparently, I have to learn a little bit more.
Carol Masser, Bailey Lipschultz, I'm John Tucker. See you tomorrow. All right, I'm out of here.
You get to go home.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And a very good afternoon, everybody. Bloomberg Markets continuing on this Monday, October 2nd, first trading day of the fourth quarter. You know that because you've been listening to Bloomberg Radio. I'm Carol Massar, along with Bloomberg News equities reporter Bailey Lipschultz. No Matt, no Paul. What's up with that?
Everyone's taking vacation and they had to find a warm body, so they found me, and that's why I'm hanging out.
You're more than a warm body. You really know a lot about the market, so looking forward to talking to you in a day that's another interesting one, and we're, again, focused on the Treasury market. And we haven't talked Taylor yet, but we will get there to Taylor Swift. Somehow we'll work it into the conversation. All right, first up, let's get a check on today's top business stories and a look at that trade. Charlie, stocks taking a nosedive here.
Indeed, worst level of the day right now. Carol Massar, great to have you on board. By the way, we've got the Dow, the S&P, they're both lower. NASDAQ is higher. The rout in Treasuries intensified as traders look to Fed Chair Jay Powell for clues about the direction of interest rates. Right now, we have got the 10-year yielding 4.69% with a 2-year at 5.11%. S&P 500 index down 15, a decline of 0.4%. The Dow lower by 191 points, down 0.6%. NASDAQ up 47. That is a gain right now of just about 0.4%. Spot gold is down $19 the ounce to $18.33, a decline of 0.8%, while West Texas Intermediate crude 89.48 a barrel on WTI, down 1.5%. Brent, the global benchmark at 91.11, down now by 1.2%. First trading day of the fourth quarter after 4 losing weeks in a row for U.S. stocks. It is a busy week for economic data with that jobs report among many other reports on Friday. So how is the fourth quarter shaping up in terms of the economy? Stephen Stanley is chief economist at Santander U.S. Capital Markets.
Fourth quarter is going to be slower, I think. A lot of things that people are fearful of at this point. The government shutdown is off the front burner at least for 6 weeks, but people have been talking about student loan repayments and the UAW strike and a number of other things. I think we're going to get a slowdown, but it's probably just kind of the natural ebb and flow after such a strong Q3.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Microsoft CEO Satya Nadella says artificial intelligence could help Google extend its dominance of the search market. His remarks came as he took the stand today in the Google antitrust trial. Microsoft shares up by 0.9%. Again, recapping S&P just about the low of the day, down 15 right now, a drop there of 0.4%. I'm Charlie Pellet and Bailey and Carol. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet there with that Bloomberg Business News Flash. You are listening and watching Bloomberg Markets on this Monday. Carol Massar along with Bailey Lipschultz. And let's dig a little bit deeper into today's trade, really some of the macro drivers on a week where we will get some key macro indicators. I'm thinking about the jobs report later on Friday. Bloomberg Markets reporter Abigail Doolittle is in the house. Abigail, where do you want to start?
The acceleration of the selling that we're seeing for stocks here, it's not huge for the S&P 500. We're down about 0.4%. But when you give the fact that September was consider the fact that September was the worst month of the year, the worst quarter of the year, and that the Russell 2000, as we speak, is essentially breaking down below its 200-day moving average, and I believe it might be at a new low. Bear with me, I'm just trying to...
Yeah, no.
Low.
Doing it in real time.
It is. So we're looking at a new low on the Russell 2000 since the July peak. There is a pretty solid topping pattern there, which is a fancy way of saying that the buyers who bought well back in April and May, they're getting out, and they're getting out in a hurry.
What kind of volume are we seeing on all of this?
It's above.
Okay.
We're looking at above volume, at least for the S&P 500. And so I think that, September is historically a seasonally a tough month, and this past September was no exception, down, I think, about 5% or more, again, the worst month of the year. But it seems like some of this bearish activity is moving right into today. And what's interesting is the ISM number at 49.8, which is officially a contraction, but it came in better, slightly better than the survey and prior, or excuse me, at 49, it came in better than the survey and prior. You know, we've seen bond yields, that's where the real action is on the day, go up a little bit because of that. So we have an economy that's in contraction, manufacturing that's in contraction, but because it's a little bit better, folks are so nervous that it means the Fed will be raising in November that we have this
There's
strange
enough
reaction.
strength out there that the Fed can continue doing what it needs to do.
Yes, yet it's a contraction. I mean, it's a real irony.
This is kind of the environment we're in, Bailey.
No, exactly. Well, I was going to ask Abigail, in terms of good economic data turns into a bad stock move, is that what, are those directly related, or are we still seeing just a market driven by where yields are going?
I think a little bit of both. I mean, I think it's hard to really separate them at this point because the good economic data, and again, this isn't really even good economic data. It's an ISM below 50, but it's better than anticipated. Because of that, it's driving yields higher, which is in turn driving stocks lower for all the reasons, you know, valuation, discounted cash flows, the idea that the consumer could finally slow down, that there could be a recession. So
well, and the ISM employment actually came in above forecast, and we did see, you know, I think it's at contracting at its slowest pace in nearly a year. So like it's kind of, I feel like every data point or every set of data points, it's never all to the upside or all to the downside.
Yeah, well, I mean, so they're all a little, I mean, ISM prices paid, that's a little bit of a miss, but the rest of them are a little bit better than expected.
Right.
But just the fact that, you know, 50 being that contraction, expansion line, the fact that the better than expected number is still in contraction, and the idea that that is a piece of what's driving this action in yields and then stocks down is just a little bit of a conundrum. It's this upside down world that we're looking at, you know, often on TV. I'm putting up boards of yields, and, you know, for the 2-year yield to have that on top be at 5.11, and then on bottom you have the 30-year yield at 4.80, and then the 10-year yield in between at 4.7. I mean, it's literally an upside down world.
Well, it's weird because over the weekend, obviously, they averted the government shutdown, and it seemed like when I was talking to PMs, optimism was the kind of the main tone that everyone was striking in pre-market trading. We saw futures starting off higher. Was that drifting just because of the economic data? Obviously, you mentioned a weak September going into what typically is a strong final quarter.
Strong final quarter, but Octobers can be tricky, you know, to say the least, between 1929 and 1987. Steve Sosnick of Interactive Brokers has on air and a couple times made the comparison between this year and 1987. One of my favorite market watchers, somebody separate from Steve, has also made that comparison just from an SPY comparison standpoint. And the idea there is you have yields super high, you had stocks high, that something's going to break. Now, we saw a little bit of that earlier this year with the regional bank crisis, but, you know, Jamie Dimon last week talking about a 7% Fed funds rate, I think it really bringing to mind that yields are going higher, investors are taking that seriously. So we have that little bit of pre-market green before, but then, you know, this sort of swamping narrative comes back and follow through from, yes, that negative September and that third quarter.
I think that's really interesting. And I also think, you know, fourth quarter is going to be tricky, right? We're going to start to get earnings in a couple of weeks. We'll see what companies have to say. But this higher rate environment, we continue to talk about what that means in terms of a reset when it comes to all asset classes. What is the right level for them to be trading at? I feel like the market continues to kind of try and figure that out, especially when the data points can be sometimes confusing.
I think you're right. And, you know, it's like yield discovery. I mean, price discovery, too, if you thought about it from the price standpoint of bonds. But I think that investors, you know, bond investors, and I'm not one, and I'm sure that's a very difficult job. They've really been wrong over the last year and a half to 2 years. I mean, if you just listen to the Fed very clearly said we're hiking, and bond investors on a couple different occasions, including right now, are talking about hikes. The Fed has very clearly said we're not hiking anytime soon. So
cutting, you mean cutting?
Cutting, yes, cutting. And the only way I can come up with a cutting scenario is a bad recession. So, you know, it's sort of this back and forth pain, I feel, as though bond investors wanting a reality that the Fed has not talked about once.
Well, don't you feel like that's the one thing? Peter Atwater of William & Mary runs his own firm, used to work on Wall Street, but he said that to us last week, that one of the things is, what if we are all being too optimistic? Because we keep getting, the pandemic, there was a lot of money that came in every time something was bad. And so what if we are just being more optimistic rather than realizing maybe we end up having a deeper recession? That would be problematic, certainly for some of the valuations we have right now.
I think that that's a fair point. I think that there is a solid chance that there could still be a recession. Now, I will say this. Last year, there was actually officially a recession. We did actually have 2 quarters of a down GDP. For some reason, it wasn't considered to be. The stocks did go down 20, 30%, so that was there. But there could be something ahead.
So why do we ignore that? Does that make sense?
Well, I think that people were saying that because some of the numbers out of the pandemic supply chain, like you couldn't really, I'm not quite sure what was going on there. But like I continue to bring it up because like if that was the definition, that's the definition. And I think it will be the definition in the future if 2 quarters go down. But if the Fed continues to hike, at some point it is going to take enough steam out of the economy that the consumer, about 2/3 of the economy, is going to probably run into a little bit of a wall. And I think last week or a week before that, I saw something along the lines that consumers, that they no longer have savings. So like saving spending.
We've done this story, especially for like middle class and lower income.
Yeah.
Like, they're done. They've spent everything that they had.
And the fact that you have the wealthier contingencies spending or shopping more so at the Walmarts of the world, it suggests that there's some things out there that are maybe not quite being captured entirely by the data. Now, I think the thing that would really have to go to support some sort of a recession would be employment. You'd have because right now employment, so long as people have jobs, they can pay for their cars, they can pay for their houses, the other stuff they can cut out, but they can pay for those basic things.
Bailey, it sounds like you need to do a story on like, what's the deal? I thought we had a correction.
I would think, I feel like we talked about a recession for so long, and as you mentioned, Abigail, that it technically did happen, even though we don't address that. But looking, as Carol mentioned, new month, new quarter, earnings on the horizon. What's going to be the driver for the market, though? Is it going to be earnings? Is it the Fed? Is it economic data?
It's always going to be the Fed first and foremost, especially in this part of the cycle. But I think earnings could be a big deal, just in terms of if there are surprises. I think that there's some expectation.
But what would stand out more? Are you looking at retailers? Are you looking at the bank earnings, big tech?
I think big tech, just from a stock market standpoint. Retailers, it will all be important, but I think big tech will be the biggest one, just thinking about it from a stock market standpoint and the weighting. I would go back to small cap, though, because we have small cap officially in a recession, again, at a new low, really breaking down, suggesting it's going to go lower. Typically, they lead. I was telling Matt and Paul a story last week when I worked for Hugh Johnson many years ago, and in August of 2007, he was walking around pulling out his hair, or what hair he had, and it was because the models were saying we had to sell the small cap at that point, and he couldn't see it because the S&P 500, the NASDAQ, they still went up for a couple of months. So, but he did it, and that was well in advance of obviously what happened in 2008. So small cap leads, I think it's important. So those earnings reports, some of those smaller companies will be important too, just to see in terms of the strength of the consumer. But yeah, the big tech, especially just from the headline perspective, right? Because if there's misses or guide downs or whatever it happens to be, that could really weigh on market sentiment. Not to mention the market itself if those stocks sell off.
Yeah, not too much to worry about or think about.
Nothing.
Bloomberg Markets reporter Abigail Doolittle, always appreciate her insight and setup for us here on this Monday. All right, so let's get to it and see what our next guest is seeing in terms of trends and flows, because I don't know if you saw this, Bailey, but at the end of last week, we were talking about global equity funds. They actually had inflows of almost $12 billion in the week through September 27th, led by U.S. funds, while bonds had their first outflow since April. This was a note from Citi citing EPFR Global. So I love watching flows. Market's huge, so maybe that's just a drop in the bucket, but it is interesting to see if that's a trend or turn.
No, I think the fund flow data is something we watch closely on our desk, and we know every PM is paying close attention to it, as you mentioned. When you're seeing investors flocking back into global or U.S. stocks as opposed to global, when you look at a market coming off the worst month in a year so far this year, it matters.
All right, so let's see if it matters to Phil Orlando, Chief Equity Strategist over at Federated Hermes, joining us to talk about that. Phil, so good to have you here on Bloomberg with Bailey and myself. What is it that you find interesting, and what are you seeing in terms of trends and flows right now?
First of all, thank you very much for having me back on. We were expecting that the powerful rally that we saw in the equity market, largely driven by that, relatively narrow group of 8 technology stocks in the first 7 months of the year, that there was going to be a reversion to the mean. And certainly the August, September, October timeframe is as good as any for that to occur. And so we thought the pullback might take the S&P back down to about the 4,200 level or so. Let's call it a 10-12% correction. A good chunk of that has happened. And certainly the backup in interest rates, benchmark 10s going from, 3.5% up into the 4.5% neighborhood here over the last couple of months has facilitated that. The thing that I find really interesting when you talk about flows, and I'm going to throw in a little bit of amateur technical analysis here, is that our bond guys tell us that once the benchmark 10s broke about the 435 level or thereabouts on yield, there really wasn't a lot of overhead resistance until you get up to a 5 handle. So it's interesting that you hear a lot of the bond experts and well-known people in recent days talking about the fact that they wouldn't be surprised to see treasuries at 5%.
Or 6 or 7.
I don't know that I'm willing to step in front of that freight train just yet. But certainly it's interesting that our duration committee is not adding to duration, lengthening duration here, with this big move up into the 4.5% neighborhood. I sort of think they're sort of seeing that a 5% number is reality, and let's cool our jets a little bit until we get a little bit better feel for what's going on.
Yeah, and Phil, looking at some of the major averages so far this year, the equal weighted S&P 500 is now actually red on the year. This is obviously the S&P still up 11%. Where are you putting money to work, and what do you make of that, just given the Magnificent Seven, for better or worse, is still holding major averages higher?
Well, if you look at the performance of the equity market over the course of the last couple of months since this correction started, the growthier technology-oriented names disproportionately are the ones that are giving up some of the gains, and that makes perfect sense. The areas that we've liked, have been the areas that were left for dead in the first 7 months of the year. Domestic large cap value, smaller cap names, international names, stocks that have lower valuation profiles, higher dividend yield support, and we see that rotation. So energy, for example, which has been one of our favorite categories, you couldn't give that stuff away in the first 6 months of the year. Now everyone loves energy. Well, crude oil's also gone from the mid-60s into the low 90s over the last 3 or 4 months. Again, based upon technical analysis or momentum or whatever, some folks are now saying, well, crude's going to get to 100. Well, the fundamentals back in June, when crude was sitting at $65 a barrel, told us that we could get to 80 or 90. We're there, right, probably earlier than we thought, and now we're starting to get some momentum that may take crude back up to par.
Yeah, it's kind of interesting, right? And we do talk about that certainly at Bloomberg in terms of the energy price impact. Hey, Phil, thank you so much. Really appreciate it. Phil Orlando, Chief Equity Strategist at Federated Hermes, joining us with his market outlook. I'm Carol Massar, along with Bailey Lipschultz. You are listening and watching Bloomberg Markets on this Monday, and this is Bloomberg Radio. All right, everybody, time now for a check on some of the specific companies making news on this Monday. For that, here's Lisa Mateo.
Thank you, Carol. Oil is edging higher on bets that global supply will continue to run ahead of global demand will continue to run ahead of supply. In an interview with Bloomberg, Halliburton CEO Jeff Miller said there's a lot of support for oil prices, and the market will continue to tighten.
What we're seeing, realistically, is that it's difficult to produce oil and gas. And I think that we're remembering that or realizing how difficult it is to produce oil and gas, particularly as North America, wrestles with where their production is going to land. And meanwhile, we see lots of activity around the world.
Now, from oil to jobs, don't be surprised if your paycheck is missing that big bump next year. New surveys say more companies will be tightening their belts.
Pay raises may be a lot smaller next year than they have been the past 2. As companies trim their budgets for merit raises, employers surveyed by compensation data collection firm Aon say pay hikes will average about 3.7% next year, down from 3.9% this year. A separate survey from workplace consultant Mercer found a similar trend, with merit-based salaries seen rising 3.5% next year as inflation slows.
That was Bloomberg's Steve Podest reporting. Workers at the big three automakers continue to fight for higher pay as the United Auto Workers strike enters its third week. At the same time, we're learning that another UAW walkout was avoided. The union says nearly 4,000 members at Mack Trucks in Pennsylvania, Maryland, and Florida have reached a tentative agreement. Members still need to review that proposal. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg after 4 losing weeks in a row for the S&P 500 index. A losing start to the fourth quarter with the Dow, the S&P, NASDAQ trading mixed. Right now we have got the S&P just about the lows of the day. Slight bounce off the bottom, but down 17 points right now, a decline of 0.4%. Dow Jones Industrial Average down 211 points, a drop there of 0.6%, while the NASDAQ Composite Index is up 41. That is a gain of 0.3%. 10-year yield 4.69%, with a 2-year now yielding 5.11%. Spot gold down $17 the ounce to $18.31, down by 1%. And West Texas Intermediate crude oil down 1.2%, $89.68 a barrel on WTI. The rout in Treasuries intensifying as traders look to Fed Chair Jay Powell for clues about the direction of interest rates. Bottom line here, stocks are trading mixed. NASDAQ higher, S&P down 16, drop there of 0.4%. T. Rowe Price Group and Oak Hill Advisors are launching a new private credit fund open to individual investors in the U.S. to take advantage of the rapidly growing $1.5 trillion market. Recapping, the S&P down now by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Master along with Bailey Lipschultz here on Bloomberg Markets. Most read story in the past 60 minutes, Jamie Dimon sees AI giving a 3.5-day work week to the next generation. I'd like to be that next generation, I think.
I think so, too. I mean, he did talk about living to 100, so I don't know if I necessarily want to be around for 100 years based on where the
Hopefully
Earth is
you're retired by 70 or 80 or something like that. And hopefully you're retired when, I don't know, maybe we're in a different market environment, because it was rough on the NASDAQ 100, losing about 3% in the second quarter. Our next guest knows that technology is at the bottom of the cycle. With us and with an investment outlook is Ivana Delaveska. She is founder and CIO at Spear Invest. They describe them as a fundamental asset manager and an ETF issuer specializing in investments in industrial technology value chain. So I'm curious to see what her take is on the market. She joins us here in studio. Nice to have you here with us. How are you?
Thanks for having me on, Carol.
Hey, remind our world, I did the description off your website, but to be honest, tell us about what you guys do and what you focus on.
Well, as you mentioned, Carol, we focus on B2B technology, and our niche focus allows us to really have a good sense of what's going on in tech, specifically in B2B, business to business, where companies are selling products to other companies. So we are pretty positive on the cycle. We think we're at the bottom of the cycle. What we're seeing today is that hardware bottomed, and we're just in the early innings of investments, of hardware investments. We think this is going to be a pretty big data center investment cycle ahead of us, and that's going to really drive the rest of technology out of this downturn.
So continuing to see more upside for a company like NVIDIA, which already has tripled this year and is one of the best performers in the U.S.?
Absolutely. So what's happened to NVIDIA, for example, as we saw numbers bottom and increase off the bottom, the stock is just getting cheaper and cheaper on traditional valuation metrics. So we believe what we're going to see with NVIDIA, historically, the focus has been growth investors and people trying to capture the AI hype. But as we go forward, really there is fundamental support from the numbers here. So we believe that as you go forward, there's going to be value investors that will be looking at this stock.
Talking about AI, talking about data centers.
Isn't that kind of wild, though, thinking of NVIDIA as a value stock? But go ahead.
A value stock that's $1.1 trillion
Sorry.
and seeing more upside after it tripled.
It's a different world.
ARM, the biggest IPO in the world this year, talking up a lot of AI. SoftBank owned, talking up their partnerships with NVIDIA. Is that a company that you see upside with alongside the likes of an NVIDIA or an AMD?
So we don't own ARM at the moment. They are indirectly an AI play, but what I would caution investors is that over time, everything is going to be an AI play, right? So you're going to have most applications have AI embedded in them, and most products will be able to enable AI to run on them. So over time, we believe ARM will benefit from this trend, but it's not nearly as big of a beneficiary as NVIDIA would be at this point in time.
Ivana, do we think about, though, AI in the same vein that we thought about going online, right, in the internet? And at some point, I remember having these conversations. Every company is going to be an internet play. Well, they're not. Even retail, while online and mobile ordering and all that good stuff, we still think about brick and mortar. And I'm just wondering, like, can we think about them as the same thing? To hear you say everything's going to be an AI play, I just remember saying that about the internet. Everything's going to be an internet play. And I don't know that it's actually played out that way.
Well, that's an interesting point. So when I say everything is going to be an AI play, AI will take part in most of applications that we use. That doesn't mean that every company is investable and every company will offer value. So that's where we come in. We try to look at the fundamentals, model out how much earnings potential does each company have, where does that stand compared to the street estimates, and we're really looking for capturing alpha of opportunities where people are maybe missing out on or not understanding how they are related to AI or how they're going to benefit from AI.
Because I remember one of the ways of thinking about the internet play was like UPS, right? Everybody's ordering, so, very different. So how do you think about it? Where do you think will be the best opportunities? Is it somebody who's making the chips for the AI sector, or is it something else?
So what we see is opportunities across several layers of AI. So the first layer is the hardware layer, which we talked about. So that would be NVIDIA, AMD, Marvell, basically companies that not only offer GPUs, but just broader data center networking equipment as well. We still see those as being in the early innings. The next layer of opportunity will be in the data layer. So here you have a lot of software companies that offer services in addition to the cloud vendors that are also in this data layer. In addition to them, they offer services such as data streaming, enabling you to organize your data better. Right. So this is where we see a lot of opportunities right now because they're not necessarily called AI and they're not necessarily seeing the benefit in the numbers just yet because it's a little too early. But over the cycle, we believe we're going to start seeing it as we get into next year.
And is there a third layer?
And then the third layer would be the application layer. And this would be like the application that go either directly to businesses or directly to consumers. So an example would be ChatGPT, an example would be Microsoft Office Copilot. So these are the actual applications, and that's probably the most uncertain layer because we're still trying to figure out how much are consumers willing to pay, how much are companies willing to pay for these products, how much do they actually cost on the back end, because running on GPUs is pretty costly. So this is where there is the most uncertainty. There are going to be some winners as well, But there's going to be some losers as well, right? Companies that are not going to be able to make the business case work.
Well, when you're talking AI, you can't not talk about the dot-com bubble. And one of those things that you're mentioning, though, and I've seen this being mentioned as the bear case against NVIDIA, Cisco was building the internet and was going to be this behemoth that made all the money, but it was actually companies that were working on the applications and actually benefiting from that. I know you mentioned that's kind of like we haven't scratched the surface of that, but where are you seeing the money going to be made in the longer term with AI being built out?
Well, we believe there is going to be opportunities across all three layers, right? So in the hardware layer, we're still in the early innings, so it will take few years. Hardware is very cyclical, so we'll go through cycles, right? So this is just where the early innings of this cycle, it takes usually several years for you to be putting the infrastructure in place. And then at some point, the valuations will reflect the strength of the cycle, and we would be looking to exit those investments. And then the second layer, we're just starting, right? So that's going to be a little later cycle if you want to think about it from that perspective, and it's going to be a lot less cyclical. There's still cyclicality in it, right? Like you will go through natural downturns in that layer as well, but it's all about how much is priced in today versus how much upside you see.
We're in a new month. We're in a new quarter. Earnings season's on the horizon. NVIDIA has been the big driver for this entire space. Can they live up to the expectations in this next quarter?
And they report next November 21st.
Yeah.
Well, we still see a lot of upside to the numbers. The CEO mentioned that capacity is higher each quarter, so it's increasing each quarter, so they should be able to beat numbers. I think where investors may be mismodeling the numbers, and this is why they keep beating by such large margin, is on the pricing side. So everybody's focused on volume, everybody's focused on, hey, are they really going to be able to produce this many chips? The key is pricing. Just because these new products, the H100 is priced at a 2 to 3 times premium to the prior version, you're seeing a big uplift to earnings from the pricing side.
Is there a tangential play off of this? Like I think about security. Is that like, what is the other aspects that we're maybe not talking about that's kind of AI pure, but nonetheless important in this play? And just got about 45 seconds.
Absolutely. So that cybersecurity would be in that second layer, so the data layer. So as you're talking about how to use the data, key will be how are you going to secure this data as well. So we're going to see a lot of companies first protecting applications on the cloud. So cloud is a big theme. And then another big theme is companies trying to embed security in their applications earlier in the process, so before they even write the code. So those are the two big themes in cybersecurity.
Are there any names in particular that you guys like?
Just got about 30
we
seconds.
like Zscaler a lot. So that's a cloud networking play. And then we also like CrowdStrike. That would be more going downstream into embedding cybersecurity in the applications.
Is there one AI company that we're not talking about that we should? And again, just got about 15 seconds.
Well, there's a lot. We disclose all our holdings on our website, and some of them are direct.
Is there one that isn't in the headlines that you think we should be paying note?
Cloudflare would probably not be getting enough attention. They are building out a very unique network of GPUs, and they're enabling companies to be able to run these GPUs and use a lot of the LLMs. So I think that's one maybe that I would highlight.
Great perspective on AI, and I feel like covered ground that we don't always cover, so thank you. Ivana Delevska, she's founder and CIO at Spear Invest, joining us here in studio. All right, let's get a check on world and national news. Off to D.C. we go, and Nancy Lyons. Hi, Nance.
Hey, Carol. Donald Trump is in a New York courtroom today for his civil fraud trial. The judges already found Trump liable for misleading banks about his assets. So today's proceedings involve 6 remaining claims in the amount of damages owed. Trump spoke before heading into the courtroom today.
These are corrupt people we're dealing with, the most corrupt people. We have a great company. I built a great company. It's got tremendous value. It's got some of the greatest real estate assets in the world.
New York Attorney General Letitia James says her job is to enforce the law.
My message is simple. No matter how powerful you are, no matter how much money you think you may have, no one is above the law.
The civil case is a non-jury trial. The Supreme Court justices are back at work on this, the first Monday in October. The justices are taking the bench with new ethics concerns about some of them accepting flights and vacations from their billionaire friends. A Gallup poll released last week shows public approval of the court remains at historic lows. Just 41% approve of how the court does its job. The Nobel season is underway, and two Penn researchers, Caitlin Carrico and Drew Weissman, will share the $1 million prize for developing the technology that led to the mRNA COVID vaccines. Ricard Sandberg announced their contribution.
This year's Nobel Prize recognizes their basic science discovery that fundamentally changed our understanding of how mRNA interacts with the immune system and had a major impact on society during the recent pandemic.
The annual prizes for achievements in physics, chemistry, medicine, literature, and peace were established in the will of Alfred Nobel, the Swedish inventor of dynamite. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, they're both lower. NASDAQ holding on to a 38-point gain, up by about 0.3%. The NASDAQ 100 index up 0.4%, but the Russell 2000, that's the index of small cap shares, down now by 1.5%. The Dow trading lower by 220 points, down 0.7%. S&P down 19, drop there of 0.4%. The rout in Treasuries is intensifying as traders look to Fed Chair Jay Powell for clues about the direction of interest rates. Right now, the 10-year's yielding 4.68%, with the 2-year 5.11%. As for the market backdrop, Matt Stuckey is Senior Portfolio Manager at Northwestern Mutual.
Rates are ultimately going to be the driver of the outcome of this Fed tightening cycle, which from our perspective is a form of recession, the timing of which we think is uncertain. I think that we've been surprised with the resiliency that we've seen from the economy throughout 2023, especially within the labor markets.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Tesla said it shipped 435,059 cars globally in the third quarter. This factory downtime led to its first delivery decline in more than a year. Today's delivery results did miss expectations, but Tesla shares are driving higher. Right now, we do have Tesla advancing by just about 1.1%. Recapping, stocks are trading mixed. The Dow, the S&P, they are in the red, extending last week's declines. NASDAQ up 34, higher by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Massar along with Bailey Lipschultz here on Bloomberg Markets on this Monday. Among the most read, it's a Bloomberg exclusive by our Anna Wong and Tom Orlick, why a U.S. recession is still more likely than a soft landing. So even though shutdown averted for now, you still have UAW striking, you still have some concerns about higher rates, what happens with consumers. There's still enough things that could...
Oil prices, they call it out.
I keep waiting for that. Like, I think that's something we're covering, but maybe that's going to bite more than we realize.
I think it's a bigger issue, definitely.
Yeah, exactly. All right, well, let's see what our next guest has to say about kind of the macro environment that we are living in and what type of investments investors are really trending to. With us right now is Amanda Rebello, head of Xtracker Sales, U.S. Onshore at the global asset manager DWS Group. Xtracker is, of course, the ETF brand owned by DWS, which has roughly $900 billion in assets under management. She joins us in studio. Hello. How are you?
I'm very well, thanks. How are you?
Good. What do you make of the macro environment? We're kind of happy to start off a new quarter, but it doesn't mean things won't carry over. How do you see it?
Yeah, I think that what we feel is that Fed policy is being felt in the slowing housing market, and we see that there are higher rates, which are really a reflection of real rates as opposed to like higher inflation expectations. From the equity perspective, we're expecting by the end of the year that S&P is going to be at 4,100, and we do expect that there will be a rebound into next year to around the 4,500 level. But
that's
it's going to take 12 months.
Yeah, was not expecting you to go there.
So if you think you're depressed, we're depressed as well.
Looking at different benchmarks, so you got S&P equal weighted, we were saying turn negative for the year to date.
Yeah.
Is that going to be trending more towards the downside given that call, or do you see the Magnificent Seven, some of those bigger technology shares underperforming the rest of the kind of market?
Yeah, so actually equal weight is something that we've been speaking to investors for a long time. We actually have a product in Europe which is almost 5 years old, and I think that all of these kind of sectoral overweights are definitely something that investors are thinking about. Only last week we actually had clients also asking us about how do they get rid of overweights in financials as well, for example. Especially, and I don't think that's necessarily
like the big name financials?
Like the big name financials, so not even like the fears around smaller banks and more banks collapsing. I think that at the end of the day, there is a need for stepping away from market cap weighted. We think it makes sense a little bit more to think about quality and value inherent in US large caps. So we've been speaking a lot about our product, quality at a reasonable price. So it's based on like the Russell 1000, thinking about those stocks that display strong components or a strong kind of direction towards quality and value. And we think that usually we kind of think more about single factors.
What's quality in today's environment?
Yeah, so quality is thinking about, kind of smaller drawdowns, but also thinking about robustness and paying out dividends as well. And, divs more broadly, there's a lot of demand for bird in hand, basically. So if you can't be sure where your price return is going to be, at least thinking about your total return, but grabbing the dividend beforehand
that feels conservative to me. When I think I think about old dividend reinvestment plans, drips.
Even if you don't need income, right? People are asking for this.
Well, when you look at the market right now, we have a 10-year yield at 4.69%. Jamie Dimon was asked if rates can go to 7%. He said the answer is yes. What starts to break if we see rates in the 7% range?
Well, I think really you think about kind of the impact. Something that we're speaking about on the desk a lot is consumer credit, right? So then I think already we start to feel the pinch, all of us, like people in our industry, for example. We're definitely not at the brunt of like having kind of very tight kind of earnings and so forth, like from a household perspective. But if even we're complaining about oil prices, about the price of gas, about the price of milk, eggs, kind of all of these things, then I think a lot of people start to be more dependent on credit cards, for example, and you obviously see then like a higher rate that they need for financing then. So, I mean, I was in the industry in 2007. I remember I was launching GMAC bonds at par, and then 2 weeks later, they're selling at like 65 to the dollar. I'm hoping it's not going to be as dramatic as that, but I think that there is a possibility that you start to feel like more pressure on the consumer from that credit perspective.
That feels pretty negative.
Yeah.
That we could actually get there on the consumer side of things.
Yeah.
And, we always talk about how important the consumer is, certainly to the U.S. economy, and keeping momentum going. So are you saying that we could potentially see an 07, 08 feel, but it's the consumer version of the story?
I think it kind of ends up transpiring through the whole system, potentially. But what's interesting is that maybe versus 2007, you actually have more global equity firms now that are reliant on kind of U.S. consumer revenues and vice versa, right? So maybe there's kind of scope for some contagion in some regard in terms of, I'm from the UK, FTSE 100 is not just about UK consumer spending and UK kind of industrial demand. Same for, DAX, CAC 40, and likewise the S&P as well with the rest of the world. And especially now you start to see kind of more broadly, not just US rates going up, but also European rates as well, for example, then I think it's maybe not something that we can always isolate. So,
new month, new quarter, earnings are on the horizon. What matters the most when we go into the fourth quarter? You said 4,100 on the S&P. We haven't been that level since May. So is that
since May?
Is that earnings breaking? Is that the Fed hiking again? Is that the economic data really kind of petering out?
So we do think that there are some opportunities, even despite this this kind of bearish tone in that projection. What we quite like is we think there's some opportunities in small cap. We think again it goes back to buying the right names within the S&P 500 as well. If you do want to look at large cap and then also in the mid cap part, we quite like thinking about Europe as well. And that's not just because we're a European house. We do think even our US, America's CIO thinks this as well. Yeah. There is some opportunity in European equities. Obviously, they were hammered last year, continue to be hammered into the first half of the year as well. So we think there's a value component there. And then when you think about European equities, they typically always yield more than US equities as well. So S&P div yield is about 1.55%. The Euro Stoxx 50, for example, is around, I think, 435, something like that. And then if you think about a dividend-focused strategy on international equities, of which European equities is a large part of that, think about HDEF, for example, in our range, you can end up yielding something like 5.65% on an annualized basis.
Amanda, were you guys as negative? This feels pretty negative. Were you as negative a month ago, 2 months ago?
I think we were feeling around the same level, to be honest.
Yeah.
But then, you see days like today where the screen is red again.
Because we go back pre-August and it felt like it just kept getting better and better
July,
and better.
everyone was excited. Yeah. There was no one really calling a 4,100 for sure.
Yeah, I think this 4,100 forecast, it emerged from us at the end of August. So we've had it on for about a month, yeah.
For about a month. Okay, it's just interesting. That feels like a much more negative tone, although it kind of seems to me to fit with some conversations we've been having with folks about, like, maybe we're underestimating that it could be worse off than we thought.
Yeah, and if we see a U.S. recession, how long and how deep does that go, I guess, with your kind of expectations?
Just got about 5 seconds.
I think, to be honest, we haven't yet thought about how long that will be. But when we do, we'll get back to you.
All right. Well, we will definitely check in. Amanda Rebello, head of X-Tracker Sales over at DWS Group. This is Bloomberg Radio. All right, a great, big, broad macro conversation we just had, Bailey Lipschultz and myself. But right now, let's get an update on the day's company news. A lot going on. Back to Lisa Mateo we go. Hi, Lisa.
Hey there, Carol. Shares of Tesla right now, they've been fluctuating this morning after the EV maker reported third quarter deliveries that missed estimates. Bloomberg's Abigail Doolittle has details.
The deliveries came in just a little bit above 435,000. The expectation had been for deliveries to come in at 100,000. And this puts into question whether or not Elon Musk's whisper number of about 2 million deliveries on the year, are we going to fall short of that?
Now, at the same time, Tesla has also announced an updated version of the Model Y in China to better compete with rivals. It has faster acceleration, new wheel design, and added ambient lighting, all at the same price. Now, shares right now, they're up about 0.5%. JP Morgan Chase is taking steps to build out its business servicing startups and venture capital firms. After two prominent San Francisco Bay Area banks failed earlier this year, JP Morgan bought First Republic Bank in May. Chairman and CEO Jamie Dimon spoke earlier with Bloomberg about its expansion.
If you speak to a bunch of people here, you hear them talk about, we just took out a whole bunch of new space in Palo Alto. We hired John Chena, who's one of the top people out of Silicon Valley Bank, organized around the innovation economy. We'll get it right.
Dimon also touched upon artificial intelligence, saying it's already being used by thousands of employees at his bank. He said the technology is likely to make dramatic improvements in workers' quality of life, even if it does eliminate some jobs. He said it'll give the next generation of workers 3.5-day work weeks. Shares of JP Morgan Chase right now down about 1%. I'm Lisa Mateo.
This is Bloomberg Markets on Bloomberg Radio.
Hi, everybody. Bloomberg Markets continuing here on Bloomberg Radio and on YouTube and, of course, on our streaming service. I'm Carol Massar along with Bloomberg's Bailey Lipschultz. In a moment, how Jamie Dimon feels about interest rates. But first up, back to World and National News and Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Donald Trump is denouncing the civil fraud case over his business practices as a politically motivated scam. He spoke before heading into the courtroom this morning and called out the judge in the case who's already ruled Trump must be held liable for fraud for overvaluing his properties.
He overplayed his hand and he should be investigated for what he's done. What he did in undervaluing these properties is a disgrace to our nation.
Trump faces at least one other civil trial next year, as well as trials in 4 prosecutions accusing him of a wide variety of criminal conduct, from mishandling classified documents to trying to overturn the results of the 2020 election. Well, this is the first Monday in October, and that means the Supreme Court has begun a new term. Today, Supreme Court Justice Clarence Thomas recused himself from a January 6th appeal from former Trump attorney John Eastman. He's fighting an order that allowed the release of his emails related to the Capitol riot. Thomas did not explain why he was recusing himself. California Governor Gavin Newsom's choice to serve the remainder of Senator Dianne Feinstein's term has a long political track record. We get more from Bloomberg Government's Congress reporter Zach Cohen.
He plans to appoint LaFonza Butler, who's the president of Emily's List, which is a super PAC that supports pro-choice women or women who support abortion rights in House, Senate, legislative races across the country as something of an interim appointment.
Bloomberg Government's Zach Cohen reports Butler satisfies Newsom's promise to appoint a black woman. 3 Democrats are already running to succeed Feinstein for a full term. They include the highest-ranking black woman in the House for Democrats, Barbara Lee, along with Congress members Adam Schiff and Katie Porter. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Bailey.
All right, Nance, thank you so much. Carol Massar along with Bailey Lipschultz. So 5%, 6%, 7% when it comes to the U.S. 10-year. J.P. Morgan Chase Chairman and CEO Jamie Dimon has talked about the possibility of going as high as 7%. He joined Bloomberg TV earlier on today's increasingly higher rate environment.
I just tell people, be prepared for higher rates and slower growth.
7%. Are we really going there? And how does
I don't know. When I said 5%,
growth?
they said, are we going there? Yeah, it's possible. You know, so when I talk to my board, I say, yeah, can it go to 7%? The answer is yes. Are there factors that would drive it, higher than, where it is today? 4.5, 4.6, or 4.7. I'm talking about the 10-year bond now. Yes. Is supply and demand could push high? Yes. I'm just saying, be prepared for it.
So
and then the worst case is stagflation. Higher rates because you have a booming economy and there's a lot of competition for capital is not the same thing as stagflation.
What are the ripple effects of the stress of that? 7% rates on business, on your growth?
Well, I'm not worried about J.P. Morgan. J.P. Morgan, we are prepared. We can handle 7%. We can handle 2% again.
8%?
Yeah, we can handle that too. That risk management is not the same thing as guessing the future. When risk management, looking at the range of potential outcomes and being able to say to yourself, we can handle this, we can handle this, we don't really expect it, and we can handle the in-between. If you bet your company on, one outcome, so I think all companies do that, and every company's got different exposures, input prices, output prices, some interest rates don't matter, some it's the price of mozzarella. So what's your business? Your business is different. So, but I think we don't know the effect of these things on the economy. So we may have a soft landing, we may have a mild recession, we may have a harder recession. Obviously there are potential bad outcomes. The worst one would be economically is stagflation,
right?
Where you have low growth, high interest rates, and obviously if that happens, you're going to see a lot of people struggling.
Of course, that's J.P. Morgan Chase Chairman and CEO Jamie Dimon talking earlier on Bloomberg TV with our own Emily Chang. Jamie talks, Bailey, and the world listens.
Yeah, and when he says, when asked if rates can go to 7, the answer is yes. You watch the market in real time react to it just because it is Jamie Dimon.
Yeah, absolutely. Or if you missed that interview, check it out at Bloomberg.com or check it out on the Bloomberg terminal. That'll do it for myself and Bailey Lipschultz. Have a good afternoon. Join me on Business Week later on today. Right now, though, sound on. It starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the eight ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Washington averts a government shutdown. Now things get interesting. Welcome to the fastest show in politics as the clock starts ticking on a short-term funding plan passed over the weekend that gets us about halfway through November. But it's not clear what happens after that, or if Kevin McCarthy will still be Speaker for that matter. We'll bring you the latest from Capitol Hill, and we'll talk it out with the one person who predicted on Bloomberg that we would avoid a shutdown. Sarah Chamberlain, president of the Republican Main Street Partnership. She was in the room for the negotiations and with us today on Bloomberg Radio. Bloomberg Economics says a recession is still more likely than a soft landing. We'll discuss the outlook and how shutdown politics may complicate things with Mark Zandi from Moody's Analytics. And we've got our signature panel in place. Analysis on all these stories at this critical moment from Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. So let's get started, as ever. Monday trading, Wall Street now. We bring you up to date on the markets in New York. Here's Charlie Pellet.
Hi, thank you very much. First trading day of the fourth quarter, Joe Matthew, after 4 losing weeks for the S&P 500 index. Lots of moving parts in today's trading. The S&P down now by 22 points, dropped there of just about 0.5%. The Dow lower by 234. That is a decline of 0.7%, while NASDAQ is up 21, a gain of 0.2%. S&P 500 slumping, while the tech-heavy NASDAQ 100 has pared its gains, still in the green. The lawmaker deal over the weekend to avoid a government shutdown has given equities a brief respite as the focus in markets shifts back to interest rates, especially as rising oil prices threaten to fan inflation. But bottom line here, stocks are breathing a sigh of relief. Jeanette Lowe is director of policy research at Strategas Securities.
Obviously, it was a little bit of a surprise that there was no government shutdown. We did not expect Speaker McCarthy to actually cross his caucus and work with the Democrats to pass a bill to keep the government open. So we don't have a shutdown yet. We might have another shutdown risk come November 17th, and we still have a tough road to hoe here until then.
And, of course, a lot more coming up right here on Sound On. By the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. 10-year yield, 4.68% with a 2-year, 5.10%. Spot gold down $16 the ounce to $18.32. Drop there of 0.9%. Cannot ignore crude oil. It is falling today, down by 1.4%. West Texas Intermediate crude back below $90 a barrel. WTI now at $89.56 on West Texas Intermediate crude. According to court papers, dental aligner company Smile Direct Club will be spending about 2 months looking for a rescuer and will liquidate if no buyer emerges. The direct-to-consumer orthodontics company filed for Chapter 11 on Friday. Recapping, stocks are mixed. S&P down 20, dropped there of 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, we thank you and welcome to the Monday edition of Bloomberg Sound On. I'm Joe Matthew in Washington. Glad you came with us. We didn't think this would be the story that we'd be telling today. So much for the relief rally on Wall Street, because they actually got it done. This is the moment all but one expert we talked to on Bloomberg said would never happen.
On this vote, the yeas are 335, the nays are 91. 2/3 being in the affirmative, the rules are suspended. The bill is passed, and without objection, the motion to reconsider is laid on the table.
How about it? 335 to 91. That was the House late Saturday. Next door, the Senate followed up very quickly, and with something like, I believe, 32 minutes to spare, President Biden signed it into law. Only one person told us it would happen like this, and we're going to have time to talk about motions to vacate, Ukraine funding, backroom deals, and so on. But listen to Sarah Chamberlain on the 26th of September on Bloomberg.
I do not think we're going to have a government shutdown.
You do not think we're going to have a government shutdown?
I think what the Senate put out today is going to be helpful. I think the Republicans will negotiate to try to get as close to that as possible. And I think the last possible minute, we are going to see that.
That was on Balance of Power last week, myself and Anne-Marie Horduran. By the way, the reason why Sarah knows this is because she's in the room for these negotiations. The president and CEO of the Republican Main Street Partnership joins us right now. Sarah, you were correct. A lot of folks did not see this coming. How did Kevin McCarthy pull this out?
Kevin McCarthy pulled it out with a lot of help from the Republican Main Street Partnership members. Absolutely, the Republicans wanted to do this as a straight-up Republican vote. They tried. They did their best. There were just some absolute holdouts. So the members of Main Street, there's 17 of them that live in Biden's districts. Biden won their districts overwhelmingly, so they had to make a deal. And they had gone to Kevin and said, we're going to have to deal. And he did at the last moment. He did it. I'm sorry he did it. I'm sorry he was forced to do it by his own party. But I think for the American people, it's absolutely the right thing to do.
Of course, it did take Democratic votes. That's why Matt Gaetz is threatening a motion to vacate, and that shouldn't come as a surprise to anyone. Before I ask you about that, are you allowing yourself a moment here, Sarah? A little I told you so?
No, I've just kind of moved on to the next thing. I am unique because I am the CEO of an organization that has 90 members versus a pundit who, talks to people and tries to gather information. I do sit in a room with the members. So I kind of have an inside information. So I'm not really as good. It's just I have different intel.
Well, that's right, because you're bringing us behind the scenes here. What's the conversation about Ukraine? Because Matt Gaetz went to the floor today, and I should let you hear his actual words. This idea of a motion to vacate, he says, will hinge on what Republicans learn about a so-called secret deal on Ukraine. Here he is a short time ago on the floor of the House.
So, Mr. Speaker, just tell us, what was in the secret Ukraine side deal? What commitments were made to President Biden to continue the spending of President Biden in exchange for doing things for President Biden? It is becoming increasingly clear who the Speaker of the House already works for, and it's not the Republican conference.
He says it's Joe Biden. Sarah Chamberlain, do you know anything about a secret deal on Ukraine?
I do not, and odds are I probably would know it if it existed. I just really think that's Matt Gaetz just talking, trying to justify potentially recalling Speaker McCarthy. But I have no knowledge of a secret deal at all.
Well, that's important here because the matter of Ukraine will need to be dealt with, and so will this mutiny. I don't know how many how many members Matt Gaetz has on his side here, but he has made clear he will file the motion to vacate this week. Sarah, will the Speaker survive?
So right now, I believe he will. I absolutely do think he will. To be honest with you, I have not gotten an update yet on how many members will be going with Matt Gaetz. The thought is there's between 5 to 7. So if that is all there are, then Speaker McCarthy should survive. But I really want to emphasize, I don't know who wants this job. I mean, it is probably the worst job in D.C., if not one of the worst in the country. So if Matt Gaetz does succeed in recalling Speaker McCarthy, who is going to step in and take his place? The country needs a speaker. The country needs to get things done. Your earlier segment talked about potential recession. We have to have the government functioning if the United States is going into a recession.
There you have it from Sarah Chamberlain, President and CEO of the Republican Main Street Partnership. Thank you for guiding us in the right direction, Sarah. We're lucky to have you, and I appreciate your insights today. As Sarah refers, there's a very important story that's on the terminal that you can find yourself here, but we're going to talk about it with Mark Zandi, why a U.S. recession is still more likely than a soft landing. Remember, we have spoken with our analysts at BE, at Bloomberg Economics, including Anna Wong, who said a government shutdown, a strike in Detroit, both of which at the time looked inevitable, a $100 barrel oil, and the resumption of student loan payments all come together to form a recession in this country just as we're flying into a presidential election cycle. Glad to say Mark is with us now, the chief economist at Moody's Analytics. Mark Zandi, many thanks for joining. It's good to see you, Mark. We avoided a shutdown. How about we start with the positive here? But there's no sense of what happens after November 17th. We were told that this would have corrosive effects on the economy. How worried about this are you still?
Much less so, Joe. I think, November, mid-November, I'd be pretty surprised at this point if lawmakers shut the government down. I mean, I think they realize that it's not good economics, but more importantly, it's really bad politics. And this is right before Thanksgiving and the holidays. I just don't see it. I suspect at this point they're going to come together and kind of sign on a deal that's very close to what they agreed to back when they passed legislation to end the debt limit drama. So, obviously things go in lots of different directions here as we saw this weekend, but I'm feeling pretty good that we're going to avoid a shutdown at this point.
Well, that's great to hear. I just listed off a bunch of other potential headwinds for our economy, though, and I wonder where your head is on the soft landing idea. You've been allowing for this possibility since long before the markets came around on this. Now, folks are feeling a little more downbeat, and the resumption of student loan payments is a big part of that. Mark, something we haven't talked enough about.
Yeah, Matt, the producer sent me the piece. I hadn't seen it before, right before this conversation. Took a look. Overly pessimistic in my view. It's a scenario. Yeah, sure. I mean, recession odds are high, and for the reasons that the analysis gave. I mean, obviously, we've got the student loan payments kicking back in, the UAW strike. We've got higher interest rates, higher oil prices, but they all kind of small potatoes, Joe, in the grand scheme of things. I mean, they add up to
really something.
So Q4 is going to be soft, but Q3 is gangbusters. I mean, I think GDP is probably going to come in at 4 or 5%. So, okay. And the economy is creating a boatload of jobs. Businesses don't want to lay off. They desperately don't want to do that because, they know on the other side of whatever this is, we're going to experience, they're going to have problems with holding on to labor. And consumers are hanging tough. I mean, they're spending, and based on the GDP revisions, I won't go down into the details, but those revisions were very positive. They suggest that consumers have a lot more extra cash than we thought they did. So, yeah, I mean, recession's a real risk. You look at history. If you live in a world of high inflation and a Fed on the warpath, you invariably end up in recession. So that's not an unreasonable forecast, but it's an unlikely one.
How about that? So, well, listen, your optimism is
well, it's relative optimism, Joe.
Well received in this case.
Me against some pretty bleak forecast.
I am, of course, I am. But a lot of folks think that a lot of folks have counted out the consumer, and you're not one of them, Mark. That's really what we're talking about here.
I mean, why? I mean, the consumer is like rock solid. I mean, real consumer spending growth, the whole shooting match. Everything. It's 2%-ish on the nose, which is like exactly what you want, right? That's enough to keep the economy moving forward out of recession, but not so strong that it generates inflationary pressures. I mean, it's like, I couldn't draw it on a piece of paper better than it's happening now. And all the fundamentals look good. Jobs, unemployment, real wages are rising, a lot of excess saving. Debt service is low. Yeah, I mean, low-income households are under pressure, no doubt about it. But middle-income, high-income households, their balance sheet's never been stronger. Stock prices are down, housing values are flat, but people are still a lot wealthier than they were when the pandemic hit just a few years ago. So I'm hard pressed. Why would the consumer pack it in unless something happened? Now things happen, right? There could be another shock, something we're not, we're not forecasting at this point. But so it's not again an unreasonable concern, but it seems much more likely than not the consumer is going to hang in there.
Is the Fed done?
I think so. I hope so. I mean, I don't think they need to raise rates any further. I mean, inflation's sticking to script. It's coming right in, as the shocks from the pandemic and Russian war fade, and they're increasing the rearview mirror. Inflation is moderating as you would expect, and it's going to take another 6, 12, 18 months to get it back to target. But I think that the interest rates where they are today is sufficient to accomplish that. So, and then as I said, Q4 growth is going to be soft for all the reasons that the piece, that you mentioned put forward. So it is going to be soft. So I think that'll be enough evidence. Less inflation headed to target and a slow growing economy will be sufficient to forestall, further rate hikes. I do think the Fed has set us up for, much slower rate cuts when they start cutting late next year going into 2025. But and that's one reason why long-term rates are up, over the last three weeks. But so I don't think they'll be cutting quickly, but I think they're probably the rate hikes are over.
Yeah, the higher for longer story gets interesting here. You're banking on a cut by the end of the year, I presume. Mark, what does that mean for mortgage rates? Have they peaked?
Yeah, I think so. I mean, we're set, 7.7 on a 30-year fixed. That would be, consistent, obviously with a 4.5% 10-year yield and a 300 basis point, 3 percentage point spread, which is very wide by historical standards for understandable reasons. So if I'm right about the Fed in growth, I think 10-year Treasury yields are probably close to a peak. And if they're at a peak, I think mortgage rates are at a peak. Again, I don't think rates are going to come in fast. So we're going to be, higher rates for longer here, which means we will see home sales were already dead in the water anyway. This run up in rates isn't going to do any more damage there, but it could probably will result in some house price declines here. So been expecting that for quite some time. So do think we'll see, some further weakness in housing. But hey, Joe, the housing market, the single family housing market is the single most interest rate sensitive sector of the economy, bar none.
Yeah.
And, it has held up pretty well. Surprisingly well. In fact, housing in aggregate, if you consider, multifamily activity, has actually been effectively flat because the multifamily market's been strong up to this point in time and offset the weakness in single family. So net housing has been basically neutral with respect to the economy. When, if you're really going to go into recession, you'd expect housing to be, sinking, housing in aggregate sinking, into the black hole.
Right. Yeah. I never had to buy a house in the 80s, or the 70s for that matter. But I'll tell you what, that 7.6 rate that you point out was the exact to the letter, the exact mortgage rate that we had the first time we bought a home in our family, and we thought it was a steal because we had heard about, my God, when you were growing up, they were 18%. I always feel better when I talk to Mark Zandi. I hope everyone does. The chief economist at Moody's Analytics. Thank you, Mark, as always, for sharing insights. We've got a lot to talk about with our panel, not just the economy, but shutdown politics and what the heck happens after November 17th. Does Kevin McCarthy know? And will he still be Speaker? All that's ahead with Rick Davis and Jeannie Shanzano on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. We are looking at a mixed market right now with the Dow Jones Industrial Average, the S&P 500 Index. They are both trading lower. Stocks are losing their footing as Treasury yields surge. We've got the Dow down 183 right now, a decline of 0.5%. The S&P down 17, lower by 0.5%, while the Nasdaq Composite Index is up 25 points, higher by about 0.2%. 10-year yield 4.67%. We've got the 2-year yielding 5.10%. Spot gold down $16 the ounce to $18.12, a decline of 0.9%, while West Texas Intermediate crude down 1.7%, $89.24 for a barrel of WTI. Shutdown politics, what will happen in the middle of November, and what are the potential economic effects? Mark Zandi is chief economist at Moody's Analytics, and he was a guest moments ago right here on Sound On.
I think, November, mid-November, I'd be pretty surprised at this point that the lawmakers shut the government down. I mean, I think they realize that it's not good economics, but more importantly, it's really bad politics. And this is right before Thanksgiving and the holidays. I just don't see it.
And you can hear more of that conversation on the Sound On podcast. You can download it wherever you get your podcasts. Tesla shipped 435,059 cars globally in the third quarter. This factory downtime led to its first delivery decline in more than a year. Today's delivery results did miss expectations, but Tesla shares, they're a little changed, higher now by about 0.1%. Recapping, stocks are lower. S&P down 18, drop there of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Now that we've established the government did not shut down over the weekend, we look to the fallout here. Not only what will happen after November 17th, that's how long this plan goes for, but what happens to the Speaker of the House. Congressman Matt Gaetz made very clear on Sunday morning following the vote on this continuing resolution that he was going for it, the motion to vacate.
I do intend to file a motion to vacate against Speaker McCarthy this week. I think we need to rip off the Band-Aid. I think we need to move on with new leadership that can be trustworthy.
That was on ABC. Next door on CBS, the Speaker, Kevin McCarthy, says once again, bring it on.
He's more interested in securing TV interviews than doing something. He wanted to push us into a shutdown, even threatening his own district with all the military people there who would not be paid, only because he wants to take this motion. So be it. Bring it on. Let's get over with it, and let's start governing.
Speaking of TV interviews, we're going to be talking with Congressman Matt Gaetz later on today here on Bloomberg Radio and on Bloomberg TV when we get to Balance of Power, a special show we have lined up from the Hill. We'll be talking to a lot of the folks here who are making the decisions around this and brought us to this point following weeks of on-again, off-again negotiations. Fast forward to today, Matt Gaetz on the floor of the House talking about a secret deal to fund Ukraine. And he says when he learns more about that deal, he'll have a better sense of who might vote for this motion to vacate.
Members of the Republican Party might vote differently on a motion to vacate if they heard what the Speaker had to share with us about his secret side deal with Joe Biden on Ukraine. I'll be listening. Stay tuned.
Stay tuned indeed. As we assembled our panel, Jeannie Shanzano and Rick Davis join. Bloomberg Politics contributors off a wild weekend. Rick, I'll start with you on secret deals here. Whether you think that's true or not, Sarah Chamberlain from Main Street Partnership told us earlier she's heard nothing about this. And maybe I should fill in a couple of blanks. It's important here. This legislation that passed over the weekend includes money for disaster relief, $16 billion, but no aid for Ukraine. That's expected to come up at a later time here in the appropriations process. Rick, what's Matt Gaetz talking about?
Yeah, look, I mean, it's kind of hard to tell what he thinks is secret. The president has requested funding for the Ukraine. The Senate has included it in the various versions of the stopgap bill that they were promoting. Everyone has spoken out on this. And so to think that there's somehow some hidden deal that's going to result in a vote in the House, you're going to get a vote in the House, Matt, and it's going to require you to get on the record for being either for Putin or for Ukraine. And I don't understand what he thinks might be secret. Absolutely, there's going to be a vote on Ukraine aid. I would point out that Mike Quigley, the one Democrat that voted against the continuing resolution, did so because there was no funding for the Ukraine in that bill. So everyone there expects it to happen. I don't understand what Matt Gaetz thinks is not going to happen.
Well, and there's going to be apparently a vote on a motion to vacate as well here, Jeannie, probably a lot sooner than anyone gets to vote on Ukraine. The question remains, will Democrats take part in this exercise to either protect Speaker McCarthy or help to oust him? Which do you think it'll be?
Yeah, I mean, we think there's going to be a motion to vacate. Gaetz was saying all weekend there would be an immediate motion to vacate. Then he goes on the floor today and no motion to vacate. So we're all sort of in waiting mode for this historic motion to vacate if and when it ever happens. And you're right, it's going to be in the Democrats' hands what they decide to do. And it is unclear at this point what they will decide. We heard people like Alexandria Ocasio-Cortez this weekend saying she would like to vote against Kevin McCarthy. We've heard from moderate Democrats that they are more inclined to, sort of stop and help end the chaos by keeping him there. But it's really going to come down to what Hakeem Jeffries and the leadership decide. And one interesting thing is Nancy Pelosi has said she would not vote to save McCarthy, but she will follow the leadership. So, but her advice to Jeffries seems to be don't save him. And Democrats are not happy with Kevin McCarthy. Not only the vote to impeach or the impeachment inquiry that he started, but going back to Donald Trump after January 6th, breaking his deal with Joe Biden, and then even on Saturday, jamming that bill through without giving them time to read through it. All of those things make them feel they can't trust him, and they may not want to work with him unless he's willing to strike a deal and make some concessions. But of course, that's going to cost him support amongst Republicans. So it's really unclear at this point how he survives, except he's going to have to depend on Democrats to do that.
Well, and that's the point that Matt Gaetz was making yesterday. I find this really interesting in his Sunday show interviews, Rick. It was less about firing Kevin McCarthy and more about exposing him as one sympathetic to Democrats. Listen to how he put this.
I actually think Democrats are going to bail out Kevin McCarthy. So this is an exercise to show the American people who really governs you and how that governing occurs. So I'm on a mission to change it where we're evaluating these bills independently. Kevin McCarthy is off making a secret deal on Ukraine as he's baiting Republicans to vote for a continuing resolution that doesn't include Ukraine.
All right. So, Rick, that was on ABC. He doesn't actually expect to fire Kevin McCarthy. That means the Republican votes are not there or Democrats are. Which is it?
Well, his trading range for Republicans who are willing to kick out Kevin McCarthy is probably 20 to 30 votes, right? So it's not a lot of people that he needs to run around and talk to see whether or not they're willing to exercise a motion to vacate. So he's doing that right now. That's the reason he hasn't announced it yet, is he's talking to those 20 or 30 members saying, are you with me? Are you ready to storm the blockade? And my guess is he's getting a lot of no's, because in the sort of cooler heads of the moment, I think most of these guys who have been giving Kevin a hard time realize he's probably sitting at 200 votes for speaker no matter what happens to a motion to vacate. Yeah. So it's highly unlikely that anything's going to result other than upsetting Kevin McCarthy. And regardless of whether he uses Democratic votes or not, he'll still be speaker. He'll decide what committees you're on. He's going to decide what legislation you get to pass. So, this is a gut check for those guys. I would remind everybody that they did not give Kevin McCarthy any choice. They said no 3 times in a row in the week before leading up to the deadline for funding to every option they claimed to be for. And so the same group that was tying him up in knots are now saying that he can't do business with the Democrats, which means that we don't want to do any business in the House of Representatives. I think the long ball here is Kevin McCarthy banking on getting stuff done. Whether he gets it with Democrats or not is going to be, as Jeannie said, up to leadership. But they've now shown a big propensity to willingness to support him on this budget bill. And by the way, we've got another funding crisis coming up, in the middle of November, and those conversations are being had now. But when I look at this vote, 335 to 91, I'd say that's a governing majority in anybody's business.
Does it also mean that we won't shut down on November 17th, Jeannie?
I don't know if you should bank on that. You might want to have your Thanksgiving dinner figured out in case we do, Joe Matthew. I hope we do not. I hope that the next several weeks they are able to reach deals, but it was unclear. We heard Kevin McCarthy talking about tying border security to funding for Ukraine. It was unclear how that was going to work and what kind of support he could get on something like that. We do know support for Ukraine as much as there is, or Ukraine funding, not support for Ukraine, as much support as there is, it has gone down. And you even hear the Senate saying you're going to have to do a one big bill. You can't break it up. So it's unclear how he moves this forward. And the 90 he lost in his own caucus on Saturday is telling. So he is going to have to rely on Democrats for a lot of this to move forward. But the best thing he's got going for him, to Sarah's earlier point, nobody else is in the offing for this job. Nobody wants it. Right. Nobody's near 218 votes. Would? And so who else would there be but Kevin McCarthy?
All right, we've got a lot more to talk about with Jeannie and Rick as Gavin Newsom makes the appointment, the big announcement on who will replace the late Senator Dianne Feinstein. Just one of many other breaking stories that we're looking at here today on Sound On. Let's get you up to date now. World and national news. Nancy Lyons has that from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Donald Trump's civil fraud trial is underway in New York. Opening statements just wrapped up. The former president spoke before the proceedings and called the trial a scam.
Now I have to go before a rogue judge as a continuation of Russia, as a continuation of the greatest witch hunt of all time. And I don't think the people of this country are going to stand for it.
New York Attorney General Letitia James also spoke ahead of the trial.
Donald Trump and the other defendants have committed persistent and repeated fraud. Last week, we proved that in our motion for summary judgment. Today, we will prove our other claims.
There are 6 remaining claims, and the judge will also need to determine what sort of damages Trump will need to pay for already being found liable for fraud. The Fulton County District Attorney's Office in Atlanta has subpoenaed former New York Police Commissioner Bernie Kerik to testify in the first trial on alleged efforts to subvert Georgia's 2020 presidential election results. 19 defendants, including former President Trump, are charged, and the first trial is scheduled to begin later this month. Kerik's attorney is demanding he be given immunity to testify. Well, the Fed is expanding its public outreach.
Hi, I'm Jay Powell. I'm the chair of the Federal Reserve, and I want you to know that the Federal Reserve is now on Instagram and Threads. The Fed is America's central bank, working to promote a healthy economy and a strong financial system.
The Fed says it's launched the new accounts in hopes of increasing its educational reach. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are very close to session lows right now on the S&P, down 19 points at 42.68. The selling continues from the past 4 weeks, down now by about 0.5%. The Dow's lower by 192 points, down 0.6%. The Nasdaq Composite Index holding on to a gain of 26 points, up now by about 0.2%. 10-year yield 4.67%, with a 2-year that's yielding 5.09%. Gold down $17 the ounce to $18.31, drop there of 0.9%. And West Texas Intermediate Crude Oil, WTI, it is down 1.9%. $89.04 for a barrel of West Texas Intermediate crude. American manufacturing may be poised to expand again. With that story, here's Bloomberg's Vinny Del Giudice.
The ISM Factory Index rose to 49 in September, the highest since last November, but shy of the bullseye. A reading of 50 or more would signal full recovery from the past year's slump. Improved factory production led last month's data. Manufacturers also added workers. Vinny Del Giudice, Bloomberg Radio.
Birkenstock Holding has set terms for an IPO that could raise as much as $1.6 billion, pushing ahead with the latest major test of demand for new listings. UK chip designer ARM Holdings and grocery delivery startup Instacart have slipped toward their issue prices or below amid a broader market retreat. Shares of ARM Holdings down today by 2.7%. Instacart down now by 8%. Recapping, it is a mixed day for markets. We have got the Dow Jones Industrial Average down 177 points, down 0.5%. S&P down 0.4. NASDAQ higher by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
This was Gavin Newsom, of course, the Democratic governor of California, on the 16th of March, 2021, asked about appointing a woman potentially for Senate here. Of course, not knowing that we'd be talking about now the late Senator Dianne Feinstein. But should this opportunity arise, he was on MSNBC. Here's how it went.
Will you nominate an African-American woman to restore the seat that Kamala Harris is no longer in the United States Senate? And do you have a name in mind?
I have multiple names in mind. We have multiple names in mind, and the answer is yes.
The answer is yes. Remembering, of course, that Kamala Harris had just left California to become vice president. Fast forward to today, and you have your answer. Indeed, it was yes. Gavin Newsom tweets, "I'm proud to announce California's new United States Senator, LaFonza Butler, who he writes has spent her entire career fighting for women and girls and has been a fierce advocate for working people." As you'll read on the terminal, this is the head of Emily's List. LaFonza Butler, longtime labor leader as well, ran the SEIU. As we recall some of her stylings on the podium, this was just last year, 2022. LaFonza Butler.
That right now, we know that right now is our time. And right now, it is our turn. It's our turn to build power like we've never built power before, connecting the abortion rights movement with the labor movement, with the climate movement, with the Black Lives Matters movement, with the Native American protection movement.
She will be the only black woman in the current U.S. Senate. Let's reassemble the panel for their take. Jeannie Shan Zeno, was it the right call for Gavin Newsom?
I think it was. He put himself in a bit of a bind in 2021 when he made that promise. He was under pressure because of his replacement of Kamala Harris. And, he was facing 3 really beloved members of the House who are now in the race. He didn't want to tip those scales. And so to go with Butler was a smart choice, to do it quickly, to give the Democrats in the Senate a governing majority, a smart choice. And also, I think importantly, generationally, you know, Barbara Lee certainly not happy today, was pushing for this appointment, didn't get it. But like so many Americans, people in California want a new generation of leader. And Butler does that. You know, she's in her 50s. She's energetic. She's young. She has a strong liberal record for all those things you just talked about. So it was a good move, and it allowed Newsom to keep his promise. I think it's really important that Butler did not get talked into making a deal. She'll be a caretaker, so she could run if she decides to. I think the cutoff would be December 8th, so we'll have to watch and see if she's the fourth person in this race going in then as an incumbent senator, which does give her some advantage.
Yeah, a couple of interesting things here, Rick. She did not pledge to be a caretaker. She may well run for this seat. We'll find out about that. But she lives in the greater Washington area, I believe Silver Spring, Maryland. Is that a problem?
No, I think they call that a carpetbagger. I mean, she's only a carpetbagger if she runs for office. Right now, she's just a good appointment, no guarantee that she'll run. Newsom wasn't guaranteeing that she wouldn't. And I think it's kind of an interesting pick in that regard because there's obviously a big cast of characters on the Democratic side who want that nomination. You know, Adam Schiff, Barbara Lee, Katie Porter, they've all been raising a lot of money and they're ready to roll. And to introduce somebody new to the equation, I think really destabilizes. So I wouldn't be surprised if she does become a caretaker. Kind of makes sense to bring someone from out of state who doesn't have a political lineage in California.
What do you make of this, Jeannie? And what does Adam Schiff do when there's a call to have a woman of color in this seat? So many people were looking at him for a glide path to victory. How about now?
Yeah, I mean, you know, I think Schiff definitely will stay in the race as we look at the polls now. You know, we do see that Schiff and Porter are in the lead. Again, it's still early. Barbara Lee is behind. She's also behind when it comes to fundraising, we understand. So Porter and Schiff really have the advantage from that perspective. But to your point, there are a lot of people in California who would like to see an African-American woman in that seat, and that does bode better for somebody like Lee or Butler if she does decide to enter this race. And, you know, those are concerns that Schiff has to keep in mind. That said, he's a very popular member of the House delegation from California. And I think given his polling and fundraising, he stays in this race. It's an open primary in California. That's another interesting twist on this that's going to make it a race to watch. So something to really see out there. And of course, whoever wins can, if they serve the people well, be there 30, 40 years, depending on their age, and if they're able to, you know, really serve the constituents well and get reelected. That's what we've seen in California in the past. So a very, very powerful seat.
Is this shaping up to be the most expensive Senate race of the cycle, Rick?
Yeah, it certainly could be. I mean, there are some other hot states that could generate a lot of expense, but California definitely, with the crazy primary they've got. The general election will be a walkthrough for whoever the Democratic nomination is because it's become a one-party state. But that does raise the ante when it comes to winning that primary. So, yeah, I would anticipate this being a hugely expensive state, especially as more and more people get into this primary, including potentially Butler, I guess.
It seems to me it's the story in the end, Jeannie, that you can't deny is Gavin Newsom rising. We only have a minute left. He's going to be one of the president's chief surrogates if he's not drafted into a presidential election cycle. He's the man to debate Ron DeSantis. Apparently now he's spending every day on the front page lately.
He really is. And, you know, we poo-pooing, I was at least, these Republican debates. I'm really anxious to see the debate you just mentioned between DeSantis and Newsom. They're a new generation of potential leaders from both sides of the aisle.
Yeah, I'm kind of looking forward to that, Rick. How about you? This is one that we might actually want to sit down and watch a little more closely.
It's got to be better than these two previous Republican debates that have been real snoozers. So, yeah, I'm looking forward to that, too.
It could only be better than that. You guys see Donald Trump was in court today in New York. He may not show up for the debates, but he showed up for the court date. We're going to talk about that coming up next with Rick Davis and Jeannie Shanzano. I'm Joe Matthew in Washington. We've got a lot more to follow today. The government is still open. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. JP Morgan Chase CEO Jamie Dimon says artificial intelligence is already being used by thousands of employees at his bank, and it is likely to make dramatic improvements in workers' quality of life, even if it eliminates some jobs. Dimon made the comment in an interview with Bloomberg Radio.
The way to think about it for us is every single process, so errors, trading, hedging, research, every app, every database, you're going to be applying AI. So it might be as a co-pilot. It might be to replace humans. Like, AI is doing all the equity hedging for us for the most part. It's idea generation. It's large language models. It's note-taking while you're talking to someone. And while it's taking notes, it may actually say to you that, here's the thing of interest the client might be interested in. All error, all customer service. It's a little bit of everything.
And speaking of artificial intelligence, Seema Shah is Chief Global Strategist at Principal Global Investors. She told us she is sticking with big tech names in part because of the AI theme.
The way to think about it for us is every single process, so...
Okay, so tech stocks are clearly under pressure. They've been under pressure for a couple of months. It's not even just after this this sell-off that we've just seen. They look frothy at the beginning of summer. They continue to look frothy. We continue to own mega cap tech stocks, and the reason is it's not about the valuations today. It's really about what we're expecting to do with AI. So we're not going to add exposure at this point, but I'm not selling because I do believe in the longer term productivity potential of a lot of these companies.
And you can hear more of that conversation on the Bloomberg Surveillance Podcast. Those are our top company stories. This is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where we will add Kaylee Lyons to the conversation coming up in just 5 minutes. Before we get final thoughts from our panel, Rick and Jeannie, we bring you up to date. Nancy Lyons has world and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Donald Trump says his civil trial that's now underway in New York City is a politically motivated scam. Trump has already been found liable in the case of committing fraud in his financial statements. His attorney, Christopher Kise, in his opening today said Trump has made, quote, a fortune, literally, being right about real estate investments. Prosecutors say Trump was lying year after year after year to banks and insurance companies. Supreme Court Justice Clarence Thomas has done something rare on this opening day of the High Court's new term.
Justice Thomas has recused himself from a January 6th case involving one of his former law clerks. Former Trump attorney John Eastman challenged an order to turn over emails related to the Capitol riot to the House January 6th committee. Without explanation, Thomas decided to steer clear of the High Court's decision not to hear Eastman's argument that those records were covered under attorney-client privilege. Justice Thomas did participate in a January 6th decision last year. At the time, he supported former President Trump's bid to keep the January 6th committee from seeing his documents. In Washington, I'm Nathan Hager, Bloomberg Radio.
New York Governor Kathy Hochul says nearly 400 employers throughout the state are ready to hire migrants from Venezuela who have just been cleared for work authorizations. She says it will certainly help move them out of New York City's shelters.
18,000 jobs are already available, waiting for people who signed up in the portal. So that's incredible. That can help solve our problems, at least be a start toward reducing the number of people who need shelter in our city.
Hochul says about 25% of the jobs are in hospitality, 21% in health or social services, and 10% are in manufacturing. Last month, the Biden administration took action to allow work permits for Venezuelans. Now Hochul is calling on the administration to include migrants from other countries. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Thank you, Nancy. Donald Trump back in court today. It has nothing to do with any of the indictments that we've been talking about, at least not recently. This is the New York case, the business fraud trial, $250 million business fraud trial. The Attorney General in New York, remember, says Donald Trump overstated the value of his assets by billions, up to $3.6 billion a year. And this could impact his ability to run a company, along with the whole family for that matter, in New York State. He did show up today in person to work the cameras.
This is a disgrace, and you ought to go after this Attorney General because she's turning off everybody from coming in. You know, I don't know if you should take a look at the outflow of business. Businesses are fleeing New York. because of horrible, horrible attorney generals and judges like we have. They go to other places where they can be treated fairly and with respect.
All right. A disgrace. We've heard him use that word certainly a lot of times with regard to other legal action. Let's hear about it quickly and some final thoughts from our panel. Rick Davis and Jeannie Shanzano. Why even show up today, Rick? So I'd play the cut here?
Well, I think he has been blaming his lawyers for, mishandling the case. And so now I guess he's going to pretend to be a lawyer. And we'll see where that gets him. But I think that, the fact that he's got this new novel strategy, attack the judge and attack the prosecutor before going in is going to be tested. And, I wouldn't bet for it.
Good strategy, Jeannie?
No, it's a non-jury trial. So the judge is going to act as judge and jury. And before he goes in, he calls him deranged, unfair, unhinged. I'm not sure that's what they teach you to do before you step before somebody to give you the punishment in law school. So he's got something to learn if he's going to be his own lawyer.
God knows I'm not a lawyer. Seems to be some truth there. As usual, from Jeannie Shanzano and Rick Davis, great to have you both back. We'll see you later on Balance of Power on Bloomberg TV, our signature panel with our politics contributors every day on Sound On. I'm Joe Matthew in Washington. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Still no motion to vacate. Welcome to Hour 2 of Sound On, as Congressman Matt Gaetz threatens Speaker McCarthy yet again with expulsion, but no motion. We'll wade into the drama surrounding the debate over funding the government. Yes, we are still open on this Monday. And a conversation with Mick Mulvaney, co-founder of the House Freedom Caucus, of course, the former acting chief of staff in the Trump White House, will have a lot to tell us. Later, we'll talk with Bloomberg politics reporter Mike Dorning about what happens when temporary funding runs out next month. And we'll connect with Bloomberg's Greg Storr this hour on what to watch in the new Supreme Court term. It's all after a look at Wall Street. Let's get to the markets right now with the help of Charlie Pellet. Hey, Charlie.
Well, hello there, Joe Matthew. It is a mixed day on Wall Street right now. With the Dow, the S&P, they are both lower, extending losses for the past 4 weeks. NASDAQ, though, is higher. Right now, we've got NASDAQ up 21 points, a gain of 0.2%. Dow Jones Industrial Average down 179, now a decline of 0.5%. S&P 500 index down 19, drop there of just about 0.5%. Interestingly, in the year-to-date column on the Dow, that index now remains higher by just 0.5%. 10-year yield 4.66%, with a 2-year that's yielding 5.09%. Spot gold is down $17 the ounce to $18.31, down 0.9%. West Texas Intermediate crude down 2% now. WTI is at 88.88 a barrel. Goldman Sachs strategists say rising rates are starting to weigh on American corporate profits, and if they stay higher for longer, it may upend a historical trend. As for the interest rate outlook, Michael Dart is chief economist at Roth MKM, and he was a guest this morning on Bloomberg Surveillance.
So it's a higher for longer trade based on the back of perceived economic resilience in the states, and the fact that the Fed's reaction function is to make sure that growth slows below trend. So if it looks like that's not happening, then they're going to persist for a longer period of time.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Well, maybe you were there. Sphere Entertainment shares are surging after the company's Sphere venue in Las Vegas opened Friday with a show by rock band U2. If the gains hold, the stock will be set for its biggest rise in over years. Sphere Entertainment shares, they're up now by 15.1%. Again, recapping stocks or trading mix, the Dow, the S&P lower, NASDAQ higher, S&P down 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington. Look who I found. Kaylee Lyons is with us. And I've just got to stop down because we are real people here sometimes in the throes of this whole wonky thing about the government shutting down and what might come next. Charlie Pellet just said it. Did you see the images from the Sphere last weekend?
Yeah.
In Las Vegas?
Pretty cool.
Oh, my God. We thought the outside of this thing was cool. Producer James saw it and was blown away like me. This is like, so U2 is in residency there. And I guess that's why we haven't had a chance. This is like the first concert there. So
yeah.
Can we do a live remote Sphere?
Great idea.
Put the show
Pitch
right on the
that
stage
one to
in
the
there.
managers.
Yeah, I've got to see this sometime. All right, so Vegas bound. When's the Nevada caucus again? Find out, James. Well, we've got a few things to talk about here. We thought we'd be doing a shutdown show today. We figured we'd be 2 days into a shutdown. The government is still open.
Yep.
No one's still exactly sure how that'll happen so fast, to the point where the president, with I believe 32 minutes left, managed to put pen to paper and sign this thing into law.
A buzzer beater, I believe,
That's well
is
done.
what they
That's
call
well
this,
put.
Joe.
Yes.
And yeah, we're not shut down. We will stay that way until November 17th, which is maybe when we do this entire song and dance over again. My questions are, between now and the 17th of November, will we see actually something bipartisan coming together in terms of those 12 appropriation bills? They're still going to need to be reconciled between the House and the Senate. And also by that time, will Kevin McCarthy still be Speaker of the House?
All huge questions. Did we simply prolong the shutdown? And will Kevin McCarthy have the gavel to find out? Both of those remain unanswered. Matt Gaetz did speak from the floor earlier today, but no motion. As I said earlier, here's how he put this. It says it's about a secret deal, a secret Ukraine deal. They want to find out about that before they vote.
He has questions.
So I got that about right? Here he is.
Members of the Republican Party might vote differently on a motion to vacate if they heard what the Speaker had to share with us about his secret side deal with Joe Biden on Ukraine. I'll be listening. Stay tuned.
I still don't get what the secret side deal is, though, because they didn't get money for Ukraine.
Right. I think what he's alleging is that there was some agreement that if they passed a continuing resolution,
they'll come back around with a Ukraine vote.
Right.
Which has not yet happened.
And the administration still wants it.
Absolutely, yes. And there is, I think, majority support for it, which is interesting here. No such deal, according to Sarah Chamberlain. We spoke with about an hour ago, Republican Main Street Partnership. She's the president. She was the only one who predicted this. Here she is on the 26th of September with us on Balance of Power. Sarah Chamberlain on whether the government would shut down or not.
I do not think we're going to have a government shutdown.
You do not think we're going to have a
government shutdown? I think what the Senate put out today is going to be helpful. I think the Republicans will negotiate to try to get as close to that as possible. And I think the last possible minute, we are going to we're going to see.
It's exactly how it went.
Called it.
It's exactly how it went.
Yeah.
I wonder if Mick saw that coming. We've been talking to Mick Mulvaney about this thing because we knew it was weeks in the making.
Yep.
Slow motion train wreck is what it felt like. Mick Mulvaney, what do you think about this last minute turn here?
Now you're just being mean to me, Joe. You know I didn't see that one coming. I was with everybody else and said it was going to shut down over the weekend. So,
well, yeah, but I mean, what? So you woke up Saturday though, and then something was in the water. What changed?
I don't know. I got the impression, because I was there all last week, that this really was last minute, that something happened at the last minute that changed Kevin's mind and decided this was a better way to go forward. I don't think it was the Senate passing a deal. I thought he would really go into shutdown for a couple of days. Keep in mind, a shutdown of less than 14 days is really, politically it hurts, but there's no real application in the real world because everybody gets paid, right? If people say, well, you don't get paid to go to work. You know, did you guys get paid today? Probably not. You're working today. Doesn't mean you're working for no pay. You're not going to get paid to your next pay period. So I thought there'd be a short period of shutdown. I was wrong. Be curious to see if this was just delaying the inevitable or if there's some larger deals cooking. I'm headed back to D.C. right now to see if I can find out.
Well, we look forward to hearing what you find out, but we had been talking about this, Mick, as kind of a binary choice for Speaker McCarthy. Either he allows the government to shut down or he doesn't. He acts to avert it and then risks his job. And aren't we seeing the latter play out now as a result of his actions this weekend?
I'm starting to come around to the idea that maybe Matt Gaetz is crazy, and that this is really about the fact you're talking about him. He was on all the news shows over the weekend. He's been on TV today.
Mm-hmm.
He says he's going to file a motion, then he goes to the well today to speak, and everybody covers it. It might just be a big PR stunt, and maybe it is that the outcome of the shutdown and the CR have nothing to do with whether or not Matt Gaetz is going to file his motion. He might do it one way or the other regardless. So the real question is it successful? There's always folks seeking PR in Washington, D.C. The question is, are they successful in accomplishing what they want to accomplish? I keep coming back to what you and I have talked about before, which is who else in their right mind wants the job? Who else could get the job? There's a short list of people. I think Matt Gaetz mentioned Tom Cole, who I'd like, but face it, he's not a fiscal conservative, and Tom Emmer, who would never take the job. I mean, who in their right mind would want to take the speakership under these circumstances when they could be the next ones having to deal with Matt Gaetz on the Sunday talk show? So I think you saw that in Kevin's attitude last week about just bring the motion, get the games over. I don't think that was him showing frustration. I think that was him doing the math and realizing that he's pretty secure because nobody else can win, and even if they could, they wouldn't want it.
Well, Matt Gaetz said yesterday morning in one of his several Sunday morning interviews that it wasn't necessarily about firing Kevin McCarthy, that he didn't necessarily have the votes because Democrats would come to his defense. Just to get into this more specifically, Mick, does he have the Republican votes? First question. Two, separately, would Democrats otherwise come to his defense?
I was reading some comments this morning in the press, and there were lines like, I wouldn't follow Matt Gaetz into a steakhouse. And this is all about just Matt Gaetz getting clicks and running for governor. And those were comments from Democrats. So if that's the case, look, the support for Kevin has always been strong within his party. The Never Kevin group was, between 5 and 15, depending upon what vote you were looking at and so forth. So Kevin's support within the Republicans is critical. And Matt, I guess, is assuming that every Democrat would vote against him. I sure he's thought through the process. Keep in mind, he said over the weekend he would file the motion this week. That's an important word choice because politicians love to tell, the partial truth, and nothing but the partial truth. And you can file this motion anytime and not call it up. So in theory, Matt could file it today and not ask that it be heard. And that would satisfy his promise to file it this week. There's all sorts of wrinkles here. I think the bottom line is that he doesn't have the votes to get McCarthy kicked out of office, and he knows it.
Well, it's going to come down to the issue of the Democrats, obviously. And I saw a tweet from, of all people, Marjorie Taylor Greene earlier. She posted a long thread, or I guess it technically was an X post. That's what we call them now, Mick. And she was talking about how she thinks a motion to vacate is a mistake, in part because it gives leverage to the Democrats. I'm paraphrasing her words here. But what do you think about that? Would a motion to vacate just give all the power to Hakeem Jeffries?
Well, it would, I guess, because keep in mind what would happen. Let's walk through it. I know this is inside baseball, but that's what the show's about, right? You file the motion, you bring up the motion. There's immediately a motion to table. That's not the substance of the motion. So you're not voting right then to vacate the chair. You're voting to delay indefinitely the vote to vacate the chair. That's a procedural motion. And every single Democrat could vote to either table the motion or simply abstain. Okay? Under both of those circumstances, the motion would fail. And Kevin would still be the speaker, and the Democrats could look themselves in the eye and say they never voted for Kevin McCarthy for speaker. So you have to sort of walk through the process, and I think that's what Matt is finally realizing is that this has been great to sort of get a lot of attention, but if you want to kick the speaker out, it can be really, really hard to do. And don't discount the fact that it's easy for the Democrats to say, look, I don't like Kevin McCarthy, but I don't think I want to play to Matt Gaetz's hand and bring Congress grinding to a halt when we've got a 45-day CR looming over our heads. Why don't we deal with funding the government, and maybe later we can talk about the speakership. But right now, the most important thing is funding the government going forward.
Well, he says he's going to keep bringing them up. If it fails, Mick, he's going to do it again and again and again, maybe 15 times like we saw in the rounds of voting for Kevin McCarthy to become speaker. Does that create fatigue each time he files this motion potentially? Or does it work to paralyze business in the House while we're trying to figure out how to avoid a shutdown?
Now, there's another possibility, which is that it puts him at great risk. Remember, in the background of all of this is this ethics investigation that was started under the Democrat leadership. And I will be the first to tell you that ethics investigations are extremely politicized. There's an extremely low bar. It's easy to sort of to weaponize ethics investigations. But there is an ethics investigation going on right now against Matt Gaetz, now led by the Republicans. If that committee was to come back and find Matt in some type of violation of the ethics rules, that could lead to a motion to kick him out of Congress. It doesn't seem like he's making very many friends. If there are Democrats who are saying that this is nothing more than a PR stunt and that they don't want to do anything to help Matt Gaetz, you can't imagine that the Republicans are interested in keeping him around much either. So this could actually backfire on him if the ethics investigation goes badly.
That could get ugly quick.
Yeah, I'm just anticipating more drama as if things weren't already dramatic enough.
Wow.
Mick, just as we reflect on this saga between Matt Gaetz and Speaker McCarthy that may or may not end this week, because even if he's dealt a blow, he says he'll continue to bring this up, how close we got to the edge in terms of the government shutting down. Is this House in order? Is this just literally what you and me and Joe are going to be talking about each and every week? A House of Representatives that is barely functioning. I mean, do you see this changing?
Well, it was always going to be tight anyway, Kayla, right? Because the margins are so tight. Keep in mind that the Democrats only ever, when Nancy Pelosi was in charge, she had a very small margin, and she was only ever able to pass things that had unanimous support because of it. Kevin is in the same boat. He's only ever going to be able to manage to pass anything that has unified Republican support, because any handful of his members could shipwreck a piece of legislation. So my guess is the same as it was in the previous Congress. The stuff that has to get passed is going to get passed. That means the NDAA is going to get passed, the FAA reauthorization is going to get passed, and the government's going to get funded in one shape or another. I don't think this is going to be a time we're talking about far-reaching legislation. We're talking about proactive type of things. This is going to be sort of waiting to the next election to see what the voters, who the voters send to Washington.
Well, so what's your crystal ball say, Mick Mulvaney? November 17th, is the government closed or open?
You know what? I'm gun shy now because I got this one wrong. I guess I take some.
I don't blame you. I wouldn't answer any of my questions either.
Yeah, I still think that it helps Kevin a little bit with the extreme right wing of his party, the Freedom Caucus people like me. Okay, if the government goes into shutdown for a brief period of time, we don't like to hear things like, if we don't do this, people aren't going to get paid. That's not factually accurate. If you close for more than 14 days, people don't get paid. But when you start using Democrat talking points to make your argument, that can rub the right wing of the party the wrong way. So I think Kevin lost more votes than he wanted to. He lost 90 votes in the CR. Keep in mind, it was an easy no vote for a lot of people because they knew it was going to pass. So I think Kevin's got a little bit of work to do with his right wing of his party, but I think he's got 45 days to do it. I'm still putting the chances to shut down above 75% in mid-November.
Whoa. There you go. And then we're going to roll into Thanksgiving, and it'll be weeks, right, if that happens.
Yeah, Merry Christmas to all and to all a good night. Mick, I just had to smile to myself a little bit when you talked about Freedom Caucus people being like you. Do you really think they're still like you? I heard a lot of talk on Capitol Hill about these conservatives not voting for conservative policies.
Oh, no, yeah, keep in mind, I think there's a new faction now. That the anarchist wing is different than the Freedom Caucus. In fact, I don't even think Matt Gaetz is in the Freedom Caucus. Of course, they don't publish the list. But, I saw Ken Buck the other day. Ken's a member of the Freedom Caucus, at least he was when I was there. He's a very reasonable guy. What did he say? He said, look, we need to pass these appropriation bills, at least vote on them. And if we can vote on all 12 appropriation bills, then I'll vote on a CR. That's a reasonable conservative position to take, and it's something that leadership can work with. Again, the Freedom Caucus was designed to be the conservatives that would play hardball, but could work with each other, everybody at the end of the day. That group is still there, and that's the group I think that Kevin will be able to build some capital with over the next couple of weeks.
Unreal. At least we know we're still alive here. It reminds us that we're alive, Mick. How about the Sphere in Las Vegas? Are you going? Did you see what that looked like over the weekend?
I don't want you guys to talk it up too much because I'm trying to get tickets in November, and if it sells out, I'm not going to be able to do that. So I don't think anybody should.
All right. We'll meet you there. How about that? Mick Mulvaney, we won't tell anyone. Boy, it's only Monday, Kaylee. I don't even know what to say here.
I know.
Chaos? Is that what you said? Chaos reigns. I'm Joe Matthew with Kaylee Lyons in Washington. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. S&P 500 index remains lower. We've got the Dow in the red as well. NASDAQ up 28 points, holding on to a gain of 0.2%. Stocks are slumping while the tech-heavy NASDAQ 100 has pared its gains. Right now it is up by 0.3%. The lawmaker deal over the weekend to avoid a government shutdown gave equities only a brief respite as the focus in markets quickly shifts back to interest rates. The 10-year 4.66%, but the 2-year that's yielding 5.09%. Spot gold now down $16 the ounce to $18.32, down by about 0.9%. And West Texas Intermediate crude is down 2.2%, $88.75 for a barrel of WTI. Tesla said it delivered 435,059 cars globally in the third quarter, as factory downtime led to its first delivery decline in more than a year. Today's delivery results did miss expectations. Again, recapping, U.S. stocks are mixed. The S&P down 18, drop there of 0.4%. The Dow lower as well. NASDAQ is higher. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Not the program we planned for today, but I mean that in the best way possible. I'm Joe Matthew alongside Kaylee Lines in Washington, where the government is still open. That's just we have to keep kind of pinching ourselves to remind ourselves of this. After an 11th hour deal, or so the cliches remind us, Kaylee, that pulled this thing out with truly minutes by the time we got to the president's desk, minutes before the midnight deadline. We should talk a little bit about what's in this thing and what's not, because, you know, you talk about a stopgap, blah, 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 the government didn't close. But it's important to note here, first of all, this goes through November 17th, $16 billion in disaster relief. That was a big question leading into this, and nothing, goose egg for Ukraine.
Yep, nothing for Ukraine, which of course the administration had asked for and has some words about in the aftermath of this deal going through, but also nothing for some of those conservative hardliners in terms of spending cuts or border measures.
Also
those
true.
Ultimately didn't get included in the measure that was passed.
So here we are with essentially a bridge to November 17 and no idea what happens after that. So we'll just have Mike Dorning figure it all out for us. Bloomberg Politics reporter Mike Dorning is with us here at the table. It's good to see you survive the weekend that was. I know you were working as well. Remarkable turn of events here, and the speed with which this all went through sort of captivated all of us in Washington. But we're about to go through this all over again, aren't we? The chances of a shutdown are still pretty high for November.
Yeah, and we've heard that they're, even on the Republican side, they are warning lobbyists that there's a very strong chance of a shutdown November 17th. So we should all expect that once again as a probability. But my gosh, if you'd asked me a few days ago if we were going to shut down this weekend, I would have bet on that for sure.
Well, and obviously what has to happen to avoid a shutdown between now and November 17th is to get 12 appropriation bills through both chambers. And there's no, or another continuing resolution. I see Mike's given me his, like, well, you know, there are other opportunities. Okay, theoretically, though, they want to pass these single approps bills.
In theory, that's what they would like to do, particularly in the House. On the Senate side, maybe less so because it's more cumbersome to get each one through the Senate. They have these mini buses that take more than one appropriations bill. But at a minimum, over the next few weeks, there'll be more airing and debating and trying to ratchet out what exactly people want, at least. Remember, in this shutdown, they could never even come up with a coherent set of demands on the Republican House side as to why they wanted to shut the government down. So if nothing else, the Republicans on the House side and the bipartisan coalition on the Senate side hopefully will come up with what they want as a starting position, and then, you know, we'll figure it out. It could be anything. It could be the individual appropriations bills. It could be another stopgap temporary funding measure, or it could be some global resolution where you just pass everything at once. Republicans like to deride the so-called omnibus. You feel like we're in public transportation hell, you know, with these.
Well, we know Matt Gaetz is not a fan of any of these buses.
Absolutely.
Nor a continuing resolution. He says he's going to file this motion to vacate. You know, it's really interesting, Kaylee, to hear from Mick Mulvaney earlier. You can file the motion, but if you don't call for a vote, nothing happens. So he could do that as a symbolic gesture. But it seems pretty clear Matt Gaetz does not have the votes to fire Kevin McCarthy. Isn't that right?
Well, not if the Democrats in some way, shape,
Would
or
it
form.
take the Democrats to save him?
I think there's a strong possibility right now that that Gaetz could get 4 other Republicans to go along with him, 4 of the so-called hardliners. That's all he needs, 4 hardliners to go along with him, and that, in theory, under normal practices, would be enough to vote out the speaker.
We're not dealing with
we're not dealing with normal. We haven't been dealing with normal for a long time. No. We're well past that. But all it would take is some Democrats, missing the vote or voting present, or even voting present or missing a vote on some parliamentary maneuver to block that by sending it to the table or a committee or whatnot. But if he can get 4 or more hardliners, which is quite probable, it would just take at least some Democrats tacitly helping to stop that. But once that happens, that's a really tough position for McCarthy to be in, because if he has to rely on even a little bit of tacit Democratic support to survive, then every time he does anything, he has to worry about either antagonizing more hardliners or antagonizing the few Democrats that he needs.
Yeah, I've read and heard the phrase coalition government
It's what it would be,
thrown around a lot. And the idea, though, Mike, is that the Democrats would ask for something in exchange, right? Some kind of concession, maybe on Ukraine funding, for example. I mean, what would that even look like?
I would assume they'd ask, or maybe they'd be like Marlon Brando in The Godfather, you know, the day will come when I need the favor. But I expect that they want some down payment right away. But, you know, it could be Ukraine funding. It could be asking for at least a on-the-record vote on a Biden impeachment inquiry, so they could either stop it or beat the you-know-what out of the marginal Republican swing district members who vote for it. Or it could be some sort of understanding that, you know, maybe you'll at least not shut down the government.
we don't just start small, I guess, on the asks here. This could take on a lot of different forms then, obviously, but the sticking points will remain the same. It's really the same debate today that it was on Friday, and we have no reason to believe that'll be different come November here,
right?
It's
the same debate, but the thing about Washington is there's like an infinite number of combinations and calibrations that could happen. You know, you can tack just a little way in one direction or the other, either in how you approach the motion to vacate, or how you, split the difference on some bills.
Can we just return to the issue quickly of Ukraine funding, which, of course, as we were discussing, was left out of this package, could be something that the carrot that Democrats need in order to save McCarthy. This is something Biden pushed McCarthy on over the weekend.
Yes.
You got to do this.
We know that McCarthy was pushed on it. We know that Democrats were, some people like Michael Bennett in the Senate even held it up a little bit to try to get some formal commitment from the Senate and House leaders that they would do something. Now, we don't know what exactly was committed to and how McCarthy might interpret that commitment now. Like, maybe he's committed to bring it up, but he's going to put all these border provisions on that are hard. We just don't know the answer to that. But what we do know is this is very important to the U.S. Our colleagues at Bloomberg broke the story that President Biden is going to have a call with world leaders to reassure them that the U.S. will maintain aid for Ukraine. So he's going to go and tell other world leaders that we're going to get that done. How that happens, I don't know.
Boy, that's...
It's one thing to say.
That's a game
he's
of
another thing to do.
Absolutely.
But we'll see. I mean, he knows more than we do, but...
You've got to think this is probably the last opportunity to get a supplemental request of that size, though, correct? Which brings us back to the conversation about the counteroffensive. How much can you do with this money? Because coming back again in the middle of a presidential election cycle could be dicey.
Oh, yeah, absolutely. And the Republicans, even the Ukraine supporters among the Republicans, want Biden to ask for enough money so that he doesn't have to come back to this well, so they can just get it done and not have to revisit it before the presidential election.
Yeah, it just becomes a question of what it costs to get it done, I guess, who you're going to be able to wrangle, because there will at least be a certain number of those hardline conservatives, which is not a very small number. A lot of them are already on the record voting down more funding for Ukraine, and that just could create more headaches for Speaker McCarthy.
And the thing is, the number of Republicans who really don't want the aid to Ukraine is much larger than the number of Republicans who right now are willing to try to unseat McCarthy, and he doesn't want to build up that number to be more Republicans that are unhappy with him. So he also has to, not antagonize the Republicans who are against Ukraine aid too much.
So don't antagonize the opposition party because you might need them, but also you can't antagonize your own party.
Right.
Tough spot, Joe.
Better him than me.
Yeah, no doubt. You've covered Washington for a minute. Have you ever seen dysfunction like this?
I can't say I've ever seen dysfunction like this, although, there were certainly a lot of sudden changes back and forth in the prior administration in the White House. But in terms of, just the whole operation, so dysfunctional. But then, in American history, there have been tough times before. I mean, this is nothing like, Congress before the Civil War.
Oh, my God, no.
The Vietnam era,
But in our,
before our time.
Our modern era, though, this is new level.
I didn't see those. I wasn't alive.
That's Mike was not there. He was post-Civil War.
Right.
Great to see you, as always. Mike Dorning, Bloomberg Politics reporter.
Great to be here.
He's the best. Let's get a check on world and national news now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. You've been talking about it. Florida Congressman Matt Gaetz says House Speaker Kevin McCarthy has violated a deal with House Republicans by working with Democrats to avoid a government shutdown. Gaetz urged transparency during a floor speech today.
So, Mr. Speaker, just tell us, what was in the secret Ukraine side deal? What commitments were made to President Biden to continue the spending of President Biden in exchange for doing things for President Biden?
Gaetz, who has threatened to force a vote on ousting Speaker McCarthy today, said, stay tuned. Donald Trump is in a New York courtroom today for his civil fraud trial. The judges already found Trump liable for misleading banks about his assets. So today's proceedings involve 6 remaining claims in the amount of damages owed. Trump spoke before heading into the courtroom.
These are corrupt people we're dealing with, the most corrupt people. We have a great company. I built a great company. It's got tremendous value. It's got some of the greatest real estate assets in the world.
New York Attorney General Letitia James says her job is to enforce the law.
My message is simple. No matter how powerful you are, no matter how much money you think you may have, no one is above the law.
Trump's attorney says his client will testify, as will his sons. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. Stocks are struggling. The NASDAQ Composite Index giving up earlier gains, now in the red, down 1 point. A change from our last update. We do have the S&P 500 index down 26. That is a drop of 0.6%. And the Dow Jones Industrial Average now down 223 points, down 0.7%. The rout in Treasuries intensified. Stocks lost ground as traders digested messaging that the Federal Reserve needs to leave borrowing costs high to rein in inflation. 10-year yield 4.67% with a 2-year 5.10%. Gold is down $17 the ounce at $18.30. That is a drop right now of 1%. And West Texas Intermediate crude now down 2.4%, $88.62 for a barrel of WTI. Fresh data on America's real estate market may signal a quiet before the storm. And with more, here's Bloomberg's Vinny Del Giudice.
The government reports construction spending rose for an 8th month in August on gains in housing and commercial projects. But the outlook is in doubt based on a Bloomberg survey. It implies office prices are due for a crash and commercial real estate won't bottom out until at least late 2024. Vinny Del Giudice, Bloomberg Radio.
T. Rowe Price Group and Oak Hill Advisors are launching a new private credit fund open to individual investors in the U.S. to take advantage of the rapidly growing $1.5 trillion market. T. Rowe Price shares down now by 0.6%. Recapping, a move lower for the Dow, the S&P, and now NASDAQ. S&P down 25, a drop there of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
You know, in any normal world where we weren't doing the shutdown politics and all the crazy Trump legal stuff, we'd be talking about a new term for the Supreme Court. Might even be a lead story when you take a look at the docket here. Kaylee Lines, we're talking about guns, abortion, and some very controversial decisions that are looming.
Yeah, including one about the CFPB, the Consumer Financial Protection Bureau, and how it's funded. Because when that was established, it was decided that it would be funded through the Fed, not through the normal appropriations process. And now the court's going to have a chance to weigh in on this, and that could potentially be super disruptive.
This is going to be half your life this year?
Perhaps.
Waiting for this one? That's your beat, right?
Yeah.
That's going to be Kaylee Line's story, and Greg Storrs, for that matter. I'll tell you what, this is, as I say, in any other world, we would have come in full smash, the top of the program with the greatest Supreme Court reporter on the planet, Greg Storr.
He is.
Which he is, and he's with us right now. Greg, it's hard to stack up to some of the headlines coming out of Washington these last 48 hours, but you've got some big ones cooking in this term ahead. What do you have your eyes on?
Yeah, it's going to be another very interesting term, Joe. We have a combination of cases that include really important questions about the structure of the federal government and the power of regulatory agencies, including, as Kaylee mentioned, the CFPB. And then we have some of these hot button issues, guns, almost certainly abortion. There's some transgender cases that may be down the pipeline. And all these cases will probably be decided in the middle of next year, right in the heat of the presidential campaign.
Yeah, so the timing could be interesting. Obviously, when this term opens, a lot of this is just going to be hearing the arguments. For example, when we talk about the idea that the court could be stripping authorities from some of these regulatory bodies, aren't we kind of seeing a pattern of that? This court in particular does tend to rule that way, at least from what we've seen, Greg?
Yeah, very much so. That the notion that the administrative state, the regulatory agencies are getting too powerful and don't have enough checks is definitely a theme of this court. In some areas, the court isn't really sure exactly how it wants to address those. Sometimes it steps kind of cautiously. This term, there are really three big cases that are going to get at it, and we'll see how interested they are in putting restraints on them. One is the CFPB case that really could undermine almost everything that the Bureau has done if the court wants to go that far. There's another case involving the SEC and its use of in-house judges. And then there's this big case about who has the power to interpret ambiguous statutes that may give regulatory agencies a lot of power.
I want to ask you about mifepristone. We haven't heard that word in a moment, Greg, and it's important, of course, because, well, the court had a case that preserved its status in the most recent term here. What's going to happen now? This is a move to potentially limit access to this abortion pill?
Yeah, and this is actually the same case. What you're alluding to is when the Supreme Court stepped in on an emergency basis and said, "Hey, we're going to let this pill, which is used in more than half of U.S. abortions, we're going to let that stay on the market fully while this case goes through the court system." Well, now the case is farther along through the court system, and the federal appeals court has restricted access to it, or would restrict access if its ruling goes into effect. And one of the biggest areas is with the ability of patients to get the pill by mail. If the Supreme Court were to uphold this lower court decision, it would mean no more mail order abortion pills. A patient would have to go to the doctor to get something.
So as we look for the cases to come, and in theory cases that all of the justices will be involved in, there was news today, Greg, about one justice in particular, one who has been in the spotlight in recent months due to some ethics questions around his relationship with certain billionaires like Harlan Crow, for example. Justice Clarence Thomas, can you talk to us about his recusal in the Eastman case? What is this about?
Sure. So John Eastman is this a former attorney for Donald Trump. He's under indictment along with the former president in the Georgia case having to do with alleged efforts to overturn the election results in 2020. And this is a case having to do with the House committee's access to emails. The court as a whole turned away to this appeal by John Eastman that was arguing there's attorney-client privilege. And Justice Thomas, as you said, recused himself from that case. It's the first time he has done so in a January 6th case. Didn't give any explanation. We're kind of left to speculate. There are some reasons, including a report that Justice Thomas came up in some of the emails that were on that were at issue here, and so perhaps that's the reason. But as I said, unlike some other justices, Justice Thomas hasn't yet started explaining his reasons for recusing from a case.
Would Ginny Thomas maybe be part of the reasoning on this, Greg?
It's possible. There was a case a little while back, had a high profile involving turning over documents from the White House to the January 6th committee. And in there, in that case, Justice Thomas did not recuse himself. And then it later came out that Ginny Thomas had been sort of actively involved in the effort to try to overturn the results, urging folks in the White House to do more to do that. And Justice Thomas got a lot of criticism for that. It's possible there's some connection there, but again, he didn't tell us, so we are left to speculate.
And of course, when we're talking about Justice Thomas, as I said just a moment ago, Greg, he is one who has been under a certain degree of scrutiny in the subject of a series of ProPublica articles detailing some of his dealings. It has raised a lot of ethics questions about the court more broadly. Are we likely to see that moving forward in any material way, or does the court just ignore it?
Well, we're unlikely to see anything, as far as I can tell, specifically with regard to Justice Thomas. There's not like a process where some people would hope he might be held to account for that. But a couple of justices have suggested, Justice Kavanaugh, Justice Kagan, in recent weeks, that the court might be making some progress towards a code of conduct. The Supreme Court does not have a code of conduct the way lower court justices do. Justice Kavanaugh was probably the most explicit. He said he was hopeful that the court would come up with some concrete steps soon. What exactly that means, we'll just have to wait to see.
Wow. It's going to be another interesting one. Greg Storr, many thanks for being with us, Bloomberg Supreme Court reporter, remembering what a wild term we had last time around, Kaylee.
Yeah.
We've got a lot to look forward to here, and it comes against the backdrop of so much chaos in Washington, whether you're talking about funding the government, getting anything done on Capitol Hill, or a president who's about to run for re-election.
All three
just
branches
keeps stacking up. Yes,
no
we
shortage
have all three covered
of things to talk about.
Would that be something, a code of conduct? Would be a big deal if that emerged from this term. Call me if that happens. I'm Joe Matthew, along with Kaylee Lyons. This is the fastest show in politics. Sound on the radio, on the satellite, and on YouTube. Search Bloomberg Global News. We'll keep the cameras lit for you. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. JP Morgan Chase CEO Jamie Dimon says artificial intelligence is already being used by thousands of employees at his bank and is likely to make dramatic improvements in workers' quality of life, even if it does eliminate some jobs.
All the long-term fiscal things are kind of inflationary. You know, oil prices, certain commodity prices, the green economy, the restructuring of trade. You name it, I see it's adding to inflation, not subtracting inflation. So I don't think inflationary will be that, keep on coming down. It may not.
And Jamie Dimon spoke with Bloomberg Radio in a wide-ranging interview in London, touching on a number of topics. As for JP Morgan Chase, he did call AI, quote, critical to our company's future success. JP Morgan Chase shares today fell by 1.3%. And by the way, you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Tesla said it shipped 435,000 cars globally in the third quarter, as factory downtime led to its first delivery decline in more than a year. Tesla delivered 466,140 cars in the second quarter. Today's delivery results missed expectations. Sphere Entertainment shares are surging after the company's venue in Las Vegas opened Friday night with a show by rock band U2. Again, Sphere shares today, they are rallying by just about 11.9%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Let's get you up to date on world and national news. For that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. Donald Trump is denouncing the civil fraud case over his business practices as a politically motivated scam. He spoke before heading into the courtroom this morning and called out the judge in the case, who has already ruled that Trump must be held liable for fraud for overvaluing his properties.
He overplayed his hand and he should be investigated for what he's done. What he did